Welcome to Trade Live with IG with Rich and Angeline, and we are counting down to the US election. I think it's already my gut feel is we already have an answer to the question. But what's your gut feel, Rich?
My gut feel is, do I really care? It's like this is the pre-election unspecial.
Unspecial.
It's an unspecial because we're going to try and not talk about it as much as possible,
so that we
but we're going to have to talk about it.
We're going to have to talk about it, yeah. And also, I am as excited to be at the end of this because we have been talking about this. I think the guys in the US, at least my cousins and the Tasty Nation, are they were sick of it by last November.
Yeah, completely sick of it.
Yeah.
It would just be nice to have it over with, and then we can look forward to, much more exciting things like the Federal Reserve. That's the rest of our week. Bank of England, Federal Reserve, remembering that is tomorrow. But today, of course, the markets are ready. The markets are primed. Yesterday felt a little bit like the election had been cancelled.
You think?
Yeah, you had bonds up, you had the S&P down, you had volatility.
I am going to look at here. I am going to look at here.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, would you like to take a quick look at the market?
Sure.
Even the S&Ps were down last night when you were doing your live show, last call. Even the S&Ps are up 6 right now, but they've had a relatively tight range, 26 handles, top to bottom. We're sitting right in the middle of the range. NASDAQ up 5, Russell down $2.30, and the Dow down 25. Volatility down 30 cents to 2015, but over 20, as you can see here on /VX. Bonds up a full point and change. Sadnaf talked a little bit about them earlier today. That's a 1% move. I mean, I guess they're hovering around their lows, much closer than their recent highs over the last month, but they are up a full 0.04. Notes are doing the same, almost to the same degree, a little bit, half as much on the notes, but again, catching a little bit of a bid from the bottom. Bitcoin futures down $550 to 69. Remember, about a week ago, they were flirting with 74. Oil up almost $2 to 71.43. That's the high end of its range. You can see here they traded almost $1 lower, a little bit more than $1 lower to 70.25. Gold continues its rally up $4.70, although it has had a day or two of downticks, which is basically not allowed. Silver up 17 cents. That's a bigger move in silver on a relative basis. That's a 0.5 percentage point in silver. Net gas down small. Euros and currencies, as you spoke about just a moment ago, Sadnov, euro catching a bid here, up 0.0059. You can see here on the euro last couple of days catching a nice little bid. I don't know what the yen is doing. I haven't looked. What's the yen doing?
It's up big.
Ooh, /6J. I would think the Sadnov's going to be in a much better mood today. We'll find out. But yes, the yen catching a little bit of a bid off its bottom too. We'll see if this holds. That's all I got.
Okay, so we got a bunch of emails over the weekend. I was busy answering stuff.
As we do every weekend.
As I do every weekend. I spent 3 hours yesterday morning in the coffee shop answering emails.
Oh, how nice. Have you had your first cup of coffee yet, Sadnov?
No, but I've drank a lot of iced tea.
So you own a coffee shop and you don't drink the product?
No.
And that's not good business. Not good business sense. Not good business.
I drink the iced tea, and
It's not an iced tea store. It's a coffee store. It doesn't say bad.
And likes the clock that we've put up for you because it helps you tell the time there, no matter where you're watching. But also talking about Trump media, we're just talking about this.
Yeah.
Of course, I think I'm right in saying that Trump is the majority shareholder. I won't be looking at that because I just think there's too much volatility in there. And, you know, who knows, Trump and his mates could sway things, right? And so, I mean, Trump's really into have you seen him do that wink? That wink?
What does that mean?
Bye or so. But I don't know. I just think it's just too risky. But what I am looking at is, have you heard about Geo Group?
No.
Do you remember what happened the last time Trump won?
No.
The last time Trump won, Geo Group, which is a stock that no one has heard about, really, they make prisons. It's like known as the sin stock. And when he last won, this company share price surged.
Well, that looks like it's been trading on the back of Trump's polls as well.
Yeah.
It's come off the last few days.
And it lost all its gains, I think, by the first year of Trump's term. But when he initially won, you know, when he was talking about, we're going to build walls, we're going to throw people in jail, we're just going to, remember all that? Well, this stock, if you ask any fund manager working during that time, it's seared in their memory. No one likes talking about it because who's going to sit at a dinner table saying, I really like investing in prisons, I really like investing in infrastructure.
It was 2007, 2008, we looked at some crazy stuff. We looked at bailiffs. Can we invest in bailiffs somehow? And can we invest in pawn shops? P-A-W-N. P-A-W-N.
I was just checking.
Pawn shops.
Just checking.
Because that was the, you know, trying to think of who was going to see increased earnings in 2008. It was bailiffs and pawn shops.
I was giving him that look because I did witness, true story, Richie Rich making our kitchen lady blush as he was changing and accidentally.
So with that, talking about overnight action, let's go on to that segment. Right, so what have we got going on in this morning's press? Let's jump straight into the Times this morning. What is the business and money section saying in the Times? It's still talking about the budget. Come on, Times, get something new to talk about. Investors dumped $1 billion from UK funds to avoid budget tax rise. We've got that discussion on Ryanair profits yesterday. They've actually got a discussion piece on Ryanair from Alistair Osborne here. So, yeah, he thinks turbulence is unlikely to last. So if you're interested in Ryanair and EasyJet, as somebody was on our TikTok yesterday, just bought both of them, then an interesting piece there. In the Financial Times, of course, it's all about the election.
Yep, all about the election. And also what I find especially interesting about the FT is they chose as their second headline how violence became a theme of America's election. I think this is remarkable. I think this is a huge shift because in the last elections, and also speaking to all of my cousins, I spoke about this during the analyst call here at IG when Axel and Chris were in on that too. It is the first time whereby you're hearing, you know, in the 2000s, you know, we're now 2024, guys. Let's talk about rationing. Let's talk about, hey, maybe we should get some enough food in the house, tin food, in case there is any disruption. I mean, we're talking about...
Well, the conspiracy theories are coming out this morning.
We're talking about like first world country, world's biggest economy here, where when you walk into a Walmart, you feel actually slightly, sorry, Andrew, I have to say this, right? Because I know you live in Florida, but you feel slightly sick because it is the land of abundance, right? There is like stuff flowing off the shelves, food flowing off the shelves. There's never any need for anything. And to hear this coming out, for people to be told, guys, I know you all want to make money, but maybe these few days work from home, you know, is quite fascinating.
I walked out of a Tesco in Russell Square on Sunday, off to my Diwali party, and I got my stuff, walked out, and then suddenly footsteps running past me as somebody ran out of Tesco's with a whole bag full of stuff without paying. And 3 Tesco's guys, where the blue
Security
shirts.
guards.
No, not security guards. It's just staff members came burning after him. It was like a 100-meter sprint. It was incredible. And they managed to get him. They didn't do anything to him. They just got the bag of stuff. But fair play. Well done, you Tesco, workers that care so much that you actually go chase the person that steals the big bag. Right, overnight moves. So we've got China outperforming, CSI Local 300 up 2%, Hang Seng up 1.2%, the Nifty 50 down again, down another 0.3%. I think I might look at get back into that actually.
Is the China move down to Li Qiang and the comments from or is it the Caixin?
The stronger Caixin at 52. So, but also the remarks, I'm sure, everything going in to that outperformance. So yeah, so good move in China ahead of what's happening today again over in America. What else is happening today? So what to watch in Europe? More importantly, we've got EU finance ministers meeting in Brussels to discuss Ukraine. Will be more money being sent there. And also we've got ECB Christine Lagarde delivering a keynote speech at the French Competition Authority.
I read somewhere that they're selling £10 a can of, is it Lake Como Air at those events?
Really?
Lake Como Air.
Lake Como Air at what, the French Competition Authority?
And the other event,
Right. Okay, buyer, yeah. Right, and numbers. So we've had numbers this morning in Europe so far. What have those given us? Hugo Boss. Are you a buyer of Hugo Boss? I certainly am. I like it. It's a little bit expensive for me, but in the sales, I'm a buyer of Hugo Boss.
I think it's also got a very interesting history given the suits that they design.
Yeah, right. So Hugo Boss beats estimates. Adecco Q3 has missed estimates. So the recruitment firm there, Adecco, they have missed estimates on their Q3 revenues, and also Deutsche Post have beaten. So Hugo Boss and Deutsche Post have beaten numbers. Adecco missing.
He's got very expensive taste. I hate shopping. I mean, you couldn't drag me into a shop unless I actually really needed something. But I am looking at a brand, or it owns a brand that you never find Rich in. I think he's only been in twice in his life. And that is AB Foods, owner of Primark, or Primada, as we talked about this yesterday. Full year adjusted operating profit beating estimates there. Yeah, that I will be watching this morning. Also, one that I have not tried myself, but I have this one potentially a short, ASOS. Do you ever trade that?
Not for a while. I got burned on ASOS. Bernstein had it on Outperform, and it read great. It was 2021, and I think I bought £20,000 worth in my ISA, and it went down 40%. I had no stop. It was horrific.
You let it run.
Discipline from me. Yeah. So never touched it again.
ASOS, like its clothing, which is extremely flammable, as you found, it has a terrible business structure. The amount of money it's burning just in trying to sort out its returns, and it's built it on this cheap return structure to try to get people to buy en masse. But there are reports by insiders, by ex-employees, that they just can't deal with the amount of returns, and it's just chucked, right? Because they just can't get it sent out again. There's not enough people to check it and retag it and that sort of thing. But also ASOS is part of that fast fashion that did really well in the beginning, but now are struggling to make it work because they're now up against, the likes of Amazon, the likes of Temu, and the likes of, what's the other one? Shein. Yeah. I say Shein, you say Shine, they say Shen in China. So you know the one. All extremely flammable. So I just think there's too much competition in this market.
Right, somebody who is beating the competition is Palantir. So Palantir shares up 12% last night. Well done to our newest viewer, Rajiv. Raj has had them since $11, up 12% yesterday as they had, so Peter Thiel's data analytics group reported record quarterly income and it raised its revenue forecast. High demand for those artificial intelligence software. So, now up 140% this year.
Rajiv, I like that stock. I like Palantir. And also it forms part of my, whenever I look at buying a group of defense stocks, I do look at that. They're also, by the way, if you've not been to Davos, they also have one of the biggest prime locations in Davos, and their parties / conferences always has the front half of a plane within the space. And you get to, eat and meet the CEOs, and you meet all the executives that come and mingle within this like really cool half front of the cabin.
I didn't know you'd been to Davos.
Many times. But there you go. Maybe you should go there and check them out because they also give out lots of amazing freebies.
Nice. Great. We're going to get a buzzer, people. So 4 buzzers, and they're going to make different noises. Every time we get a Trader Friends, we're going to buzz. Every time we get Davos, we're going to buzz. And then you can do 2 for me as well. Every time
he says Nike or Adidas, we press. Every time he says Vodafone, we can press it.
Yeah, or if I say that I never trade Tesla and then go and trade it. Right, what else have we got this morning? Nintendo. So Nintendo, I'm not sure if anybody trades this, but it has lost 69% of its profits. Where have they gone? Mario maybe has run off with them. But Switch sales not meeting expectations. So demand waning for Nintendo Switch. And then we also had a completely different story. Saudi Aramco posting a 15% drop in third quarter profits, but it has maintained its dividend. So big dividend there from Saudi Aramco.
Boeing, a big story as well, and it's not just the US election dominating the Bloomberg front page, but also Boeing, because they've ended the crippling strike there as workers accept the latest offer. Boeing, one that I had bought a while back. I think it was when they were close to cutting a deal, but I had to cut my losses and get out of that because it just took ages. Each time you think they were close, 38%. No, they held out for, what was it, 45%, 40%?
Through 38, I think.
They wanted 40.
38% was the agreement last night, I think.
Yeah, but at that time they were still holding out for the 40, and I thought, I can't wait any longer, and that was a month ago. So, but they accepted the latest offer.
Right, if anybody wonders, do you remember we went through in market measures what the calculation was for expected moves in stocks, and you take the volatility and you divide it by, remember the number? 19. Correct. Divide by 19. So Trump Media does have options. And the November 15th expiry is trading on a volatility of 414. I've never seen anything like it. Volatility of 414 implied vol. That is absolutely incredible. I remember there was once, I think it was on the market, I can't remember. For a short period in 2008, you could do a put ratio where it was 1/2, right? And so remember, Ange, you buy 1 put and then you sell 2 puts, right? So your break even, well, you lose money, your break even somewhere down here. It was something like buying a 500 put on the S&P 500, selling 2 250s.
Whoa.
So your break even was 0. And it was, a very small amount because there was so much panic. But I've never seen volatility of over 400. So let's see if you can do a 1x2 on Trump. So
Can we do it in 3 minutes,
so let's
Director
see.
Cam is saying 3
If we sell a 15 buck, so the 180, how much does it cost us? Maybe let's go lower. Let's go down to 10. So you receive, let's receive 150, and then look at something like, God, yeah, it's so expensive, isn't it? So if we buy a 25 and we sell 2 of the 17 and a halves, then that's roughly a zero cost put ratio. So yeah, so it costs, so let's see, increase the quantity of this one, just the quantity there. Oh yeah, this I'm tempted by this. It's whether this is worth 0 or whether it's worth, there you go, 13 cents that will cost me for Trump, putting a Trump trade on, for it to go down between, where is it now? It's 34. So I'm saying I get short at 25. I close that short and go long at 17 and a half. So $10 is the break even. And I could even turn it into a butterfly there. Let's see one of those.
The Ivy
So
rank
42 cents.
is good.
That's insane. Right, let's have another look there. That could be the trade there for
Trump
does
Media.
Trump Media go to 0? Can we say it like Trump? 0.
0. China. What else is it? Gamala. He has his emphasis on the last syllable.
Uh-huh.
So it's
Who do we think would be able to do the best Trump impression?
come on, guys. In the gallery, can you guys do a Trump impression?
So
Come on, Cam.
in the gallery today, we have Caleb and Cam. Caleb,
Why is producer Fred?
now Greg's. So I saw Caleb walking past Greg's this morning.
Oh, was it a
or
sausage
in
roll?
Greg's this morning, getting his sausage roll.
Oh,
Caleb, this one's for you. So Greg's has come down an incredible amount. And it's actually getting to that point now. Look at that. It's come out of the channel, and it's now down £27 from 32. So down 15% from the highs. I'm going to look at that one later. We're going to look at that on the open, which is what we're coming up to in 5 minutes. We'll see you then. Join us.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Right, so we got about 2 minutes till we get to that opening bell. Sax is asking us in the chat what we trade for India. So if you want to get my screen up, please, guys, that's the MSCI India UCITS ETF. So it's available on the platform. I also have it in my SIP for the longer term. But you can see that's come off from $8 down to $7.50. That was after Goldman Sachs downgraded in mid-October. Now, what do we have this morning? The big movers, expectations are Hugo Boss looking up 2% on the back of beating expectations. Adecco down 5%. So Adecco losing out there in the recruitment world. Then we've got upgrades, downgrades in the airline sector. So Morgan Stanley slashing their forecast on Air France. Down 2%, looks like they're going to be in the first thing. Lufthansa is the upgrade. So they're selling France, upgrading Germany. And producer Fred not enjoying that one. Lufthansa up 2% pre-market.
I'm also looking at senior after the Boeing news. Boeing workers accepting the latest contract offer, ending, of course, the very long drawn-out strikes. Can also look at Boeing when all session starts. And one that I thought you would pick up on, UK could approve Vodafone's 3 deal. Have you looked at
Oh, that's
that?
just literally just hit by 15 billion merger between Vodafone and Three would be
Whoa.
approved if they address competition concerns.
Opening bell.
There it is, and we are off. Producer Fred ringing our bell this morning. So, how will Vodafone respond to that news? Another stock to watch this morning, which I'm especially interested in, I would even call it my play of the day, is Severn Trent. Does anybody have Severn Trent? I haven't traded it for a long time, but 2 upgrades this morning. One at JP Morgan, upgrading it to overweight. Severn Trent, overweight at JP Morgan, and Citigroup upgrading it to neutral. So it's not often you see a double upgrade. Vodafone up 1% on the back of that story that the Three merger may get past the competition if they address the concerns through network investment. Not sure that's a real different story from what we've heard before. And what you're watching on the open?
Interesting you're saying that, because I'm watching Vodafone sort of, it moved higher initially, but now it's kind of moved slightly lower, still higher on the day, just looking at tick data there. But on the minute chart, can you see that big move higher? But now it looks like it could be making the first signs of a move. So watching that. Also checking in on senior after Boeing. That's coming off slightly, but not by much. And also having a look at some of the commodities here, because we had a good day for oil yesterday, WTI. It's still adding to gains as we speak there. And getting further to that 7232 level, which I came out of yesterday because I felt like it was turning and not gaining enough momentum to break that price target of mine. So interesting that that is moving. Let's have a look at some of the other stocks as well on my watch list. Taking a look at FTSE. This is the picture so far. FTSE there, Smith & Nephew is higher. Let's try and make it easier for you to see by me pressing my change button. There you go. Severn Trent leading the gainers board there.
So I'm literally just putting an order in here to Severn Trent because that is the story of the morning, right? Severn Trent, 2 upgrades, one at Citigroup, one at JP Morgan. I don't want to buy it right at the highs. I think it might come back before going again. So I'm going at 26.15 to try and buy 500 shares using the order function on IG. So that is in there. Right now, what other movers do we have? Ladies and gentlemen, we are seeing BT Group up 1.9%. Let's have a quick look at what we've had there. Yep, no news out. So BT up 1.9%. That's interesting. Wonder what that's on the back of. Of course, they've got numbers this week. Right, other gainers, Fresnillo, Vodafone now up 1, trying to just find its right level there. Will that make buyers? Remember that the upgrade is still going on. Let's see how many they upgraded. The buyback still going on. Let's see how many they bought back yesterday. 500,000. Goldman Sachs, what are you doing? One day you buy 17 million, the next day you buy 500,000. I don't understand what you're doing there. There's 18 million on the first and then 500,000. Very, very strange on the buyback technique there from Goldman Sachs.
One thing that you quite like and you trade quite often is Adidas is up almost 8% today, but it must be said that Adidas shares have been beaten down of late. Giving you the daily chart here, adding that to my workspace, but as you can see there, Adidas has been on a trend channel. Having a look as well at some of the other German stocks that I have on my books. Volkswagen up 0.5%. Commerzbank up 0.5% as well, along with RWE. On the downside, we have Siemens Energy down 1%. Infineon is also down. And I don't know whether you look at car stocks. Do you trade car stocks at all?
Yes.
So Carl
for
stocks,
many years.
trader friends, one of those that I am waiting on poise, because if, especially the Mercedes, the Volkswagen, if we get a second or news of more stimulus incoming from China, these stocks are likely to rise along with the luxury stocks as well. So keeping an eye on those.
Right, those airlines. So Lufthansa up 1.2% on the back of Morgan Stanley's upgrade. On the downside, Air France down 2.4%. 2.4% in Air France. Ryanair down 1.4% along with it. So yeah, a reminder, upgraded at Morgan Stanley this morning. Lufthansa up 1.1%, but struggling there. Right, now let's have a look at ABF on the back of those pre-marché numbers.
Yeah, they're down almost 5% at up 5% at the moment. Just taking a look at the action there, up 3.6%. They have come off slightly. It is one that I was watching, just giving you the print. AB Foods reporting a 32% rise in full-year profit, robust performance from its grocery division, and a solid outcome from its Primark, or otherwise known as Primada as well, clothing business, due to falling earnings in its sugar operations. So Primark owner, the AB Foods profit up 32%. Right,
not quite as robust this morning is ASOS. ASOS down 1.3%, bit of a wide spread there. Yeah, we're seeing that down 1.3% on the back of numbers on ASOS. Right, God, it's much nicer not having those all sessions open till 9 a.m, isn't it? It gives us chance to focus on Europe, focus on the UK.
Yeah.
Without those Americans butting in, taking all the
limelight
attention
and the glory. But you'll be doing that next week, aren't you?
No.
Talk with another fellow American. But Bouygues. France 40, let's have a look at that as well. France 40, Bouygues up 4.5%. Carrefour up 2.7% as well. Kering, one that I hold, up 2/3%. You hold Kering as well, don't you, Rich? I'm waiting on that, hopefully some more news out of China. On the downside, in France, ST Micro is down 2/3%. Dassault System down 0.5%. Pernod is also down slightly. So overall, plenty of risk off and risk on plays there to be had.
Right, what is stealing the limelight in Germany? It's the German steelmaker Salzgitter. So let's get that story up there. Surging 22% at the moment on a potential takeover offer. I have traded this one for about 15 years and never did I think it would get taken over. The company said its second biggest shareholder, GP Günther Papenburg, was considering a potential bid jointly with a partner. So it sounds like a buyout. They're looking for 45%. It's based in the state of Lower Saxony, who also hold 19% of Volkswagen. So they will make the decision. They hold 24%. Let's have a look at the graph, the chart of Salzgitter. That's only back up to where it was at the start of October. That's interesting. So,
did you hear that things are so bad in Germany now that they're just eating sausages and cheese? About this.
Not sure if that's true.
It's called, you're not looking at my face, not looking at my face here. People look at my face as I'm asking him this. It's a joke. Do you know things are so bad they're stockpiling sausages and cheese? It's called the worst case scenario.
The worst case scenario. Let's get my girlfriend on the line and see if she likes that joke.
It's so bad.
So yeah, Salzgitter, you see from that longer term chart, that is why they're trying to take over this company, right? That's why they're trying to bid for it. So interesting. If you've got that story underpinning it, that is very interesting. I could almost be tempted into that. I'm going to take a look at that because they can't just steal it for that price, surely. Do you get it? Steal it.
Steal it.
German steel company. Yeah, so
It's as bad as my worst case.
yeah, we're full of the puns this morning, dear me.
Let's have a look in the soft commodities space as well, because you know, sometimes they give us really good places to trade ahead of big events like the election. Looking at coffee, Arabica 1.3%, cocoa in New York up 1%, soybean down day for soybean oil, down almost 2%. And sugar, one that you can trade here. We still wait. That's just a call. Up almost 1%.
Vodafone kicking on, friends, kicking on. 1.8% now. Up she goes. Vodafone up on the back of this this release this morning at 7:15, saying that the regulator said on Tuesday Vodafone's merger with Three could be cleared of competition concerns if both companies commit to investing in network expansion and consumer protection. Of course, the consumer protection is promising not to increase prices, and yeah, investing in network expansion. I think that is a clear win for Vodafone there. It's, of course, one of my favoured stocks, as long as the big delta now is on that deal in Italy. So Vodafone having wranglings with all the competition regulators out there. Will its deal with Swisscom get passed in Italy? That then allows it to do another 12 months of buying back stock. It allows it to buy back another 10% of the company. But also, this regulator concern in the UK with its merger with Three was a significant part of the business to cut costs. So two really important things. Looks like one of the hurdles could be cleared with that story this morning from the UK regulator.
Speaking of which as well, are you positioned for, as we've been counting down and we're finally getting crunch point, are you positioned for a Trump or a Kamala or neither? Are you just going to go with volatility and...
It's a great question, Ange. Wonderful question this morning, and I'll show you what I've done to my portfolio. So there is portfolio one. This is my sort of base portfolio there. Not much going on. I've got the FTSE trade that I put on, the 8200, 8350, 1 by 2. You can see 1 by 2 because I'm long one, I'm short 2. That is so far not making any money at all. We've got that on for November expiry. The Nike, forget that. That's just because I don't want to close it because it will cost me 5 ticks. Nvidia, I closed my short calls on Nvidia yesterday. And I closed my short 125 puts on Nvidia yesterday. They paid a beautiful premium. They paid me over, I think, $1,000 yesterday on that. You know, Nvidia tried to be up 3%. That was ridiculous on the story that it's going into the Dow Jones, because nobody follows the Dow Jones. There's no money that needs to be bought in Nvidia. It's like 20% of one day's volume. It's ridiculous. And then I've got that 132 call, which is, I'm tempted to actually take the hit on that. I was speaking to Rajiv about this last night. It's still priced at 24. Do I think, where's cable this morning, Ange?
Cable is currently at 1.29, let's call it.
2900?
What, 2972.
Okay, a big difference. 129.72. Yeah, I'm going to close that because that has still got quite a lot of premium left in it. So selling 2 of my 132 calls at 24.5. That's gone as well. So that's one portfolio. And if we can just come off the screen a second while I put my password in, then we can see.
Whilst we're on, as he's putting his password in, there's a really handy ING chart. I'm just showing you because someone's made the time to put this together, and it's really cool. 1, 2, 3, 4, which I found really easy to understand. But it looks at not just their base case, but also what happens if we, you know, a combination of extra fiscal stimulus, potentially a volatile US election aftermath, and also why they think a December rate cut has become less likely. And why it hinges on the 2 inflation reports before Christmas. So this, if you're looking for a handy explainer, is on the ING website.
Wunderbar.
Wunderbar.
Right, now this is my longer term portfolio. Okay, so this is where I put my UK option positions and my longer term S&Ps. You can see the 3 Vodafone puts here. Now, am I long puts? No, because I think the stock is not going to go down. I think it's going to stay where it is or go higher. Therefore, I'm short 100,000 shares worth of the 72s for March. I'm short 100,000 shares of the, 100,000 puts. So therefore, if the stock goes down through 72, I go long 100,000 shares. If it goes down through 70, I go long another 100,000. But that pays me, well, you can see what the 62 positions paid, a really nice 2,800. And there's still another £6,000 in those Vodafone puts there. If you want to trade UK options with IG, then please give your PCM a phone, or anybody can phone in and deal. There's a 1 penny charge on those options positions. So something like an SSE where the options trading at 25 pence or something, then it's a lot better, just a 1 penny charge on 25 pence rather than 4. But that was how high conviction my idea was in Vodafone.
Richard, just want to say we talk a lot about diversification. There's not a huge amount of diversification there. I guess this is diversifying your pension, your other pension pot, the SIP. Is that right? Is that how it's?
No. This is just so the other ones on there. I am long the 5,800 puts on the S&P 500, and then I'm short the 5,400 puts. So if you want protection, then that's your protection right there. Because I'm if the S&P 500 goes down to 5,400 in the next couple of weeks, then I've got that position on there. And then for the end of the month, if we go through 5,300, I've
Those
also got
pairs.
1 by 3 there. So yeah, so that's not about diversification. That is an options portfolio where I have index downside protection.
Let's. How about in terms of stocks? Have you changed your portfolio mix, or have you just held?
Taking it right down to almost nothing ahead of the election. So yeah, no positions going into tonight. Something that is as binary, exactly. Something that's as binary as tonight with the election result. I much prefer to be reactionary than having to worry and go, oh no, I'm long Trump media, it's down 40%. So yeah, reminder, huge couple of days here. Election result, do we even get it? Do we get, Trump throwing his toys out the pram? And then we've got Federal Reserve, we've got Bank of England. So many things going on.
And Bank of England still expected to deliver a cut last time I checked.
So I'm waiting like a leopard in the trees, waiting for those opportunities, like Severn Trent. I don't think I've managed to get any of those this morning. I think it might have kept on going, unfortunately. Yeah, it has. That's frustrating. So you can see Severn Trent there, 2 upgrades. JP Morgan are a house that move stocks, right? Now, when you see an upgrade from JP Morgan, like they have done in Severn Trent this morning, then I shouldn't have been a dick for a tick. That is my name after all. But you can see here on the, let's go to a 1 minute chart. Yeah, you can see here it opened high and it's going higher, Severn Trent. So I've got a limit in here down at 26.15 and it's not managed to get me any, unfortunately.
Oh, my AB Foods isn't doing too well because investors are looking to focus on the sugar side of things rather than its overall good 32% rise in profit. And so I'm now thinking to come out of this because I don't think there's any more to be had. So I'm going to close out of that. Unfortunately, a loss, but hey, that's how the cookie crumbles, right? You can't win all the time. So let's have a look at the indices now. It's looking like a pretty flattish day, but for the US indices, but no surprise there, given the kind of day, the kind of next hours we are counting down to. FTSE down slightly, the Germany 40 down 0.2%. And also, like Rich said earlier, we did see some bid up over in Asia. However, it is looking like a pretty tense day. Let's have a look at the volatility index, shall we, ahead of the next few hours.
Yeah, this was the strange thing. It got sold hard yesterday.
Yeah, do you know why that happened? Because I couldn't figure out a reason.
Well, I think it's because everybody had the same position. Everybody's bought their options,
Right.
bought their protection ahead of the election. So, yesterday was this kind of final positioning, and vol just collapsed.
Well,
So, it could be a good chance to get into it.
yeah, but do I get into it again? I've already got into it.
You're long, aren't you?
I am long because my take profit is Richie Rich's favorite number, 25.
Yep.
So
And where's your stop?
my stop is around 18. But also looking at, I think someone else asked what else other than Geo. So Geo is that prisons company. They build prisons.
You're going to be looking at this further with Tom Wolstenholme today, aren't you?
Yes, and someone else asked on the chat, what else are you looking at? I mean, I don't know whether we offer it on this website, but Core Civic is, we do. We do on IG platform. Core Civic is the other one that did very well the last time we had a Trump win. However, also, don't forget.
Can we go back to 2016 there and see how it did?
16. Oh, can we get back as far as,
Well,
let's go to monthly. 2016. 2016. There you go.
So it just regained what it lost beforehand. Right. Yeah, so the section with Tom Wolstenholme this morning, Ange is going to be quizzed on stocks and sectors that we may move on the election.
Yeah,
I look
so
forward
stay
to watching
tuned
that.
for that.
Finally, bond move. So bonds lower across the board. You see that UK gilt now 93.60. So remember, it went through the 94 level the morning after the budget. And that's the important ones to watch. 93.60. I'd feel a lot more comfortable if it was back up through that 94 level. Let's see what happens on the Bank of England tomorrow. Is it time to go to some questions?
We could go to some questions, but I was just going to say, before we go to the questions, I find it incredible how people's memory just doesn't work. I was at the cafe yesterday. I heard these people talking about how, it's awful, and the Labour Party, now raising university fees and, just tax. And I was thinking, wait a minute, it wasn't so long ago when it was Nick Clegg and Cameron.
The heroes.
Yeah, that raised university fees in the first place. And correct me if I'm wrong, Rich, they were conservative and public school boys as well. So, I mean, all these people complaining about how, the Labour Party. So it's my rant of the day.
I'm not sure if it's against the Tories or the Labour or where.
Against people with bad memory, bad memory. But here we go. Monkey Man and Dale's Boy have questions.
Perfect. Well, that takes us ideally into confirm and send.
Welcome back to Confirm and Send, where no question is too difficult or too crazy. We'll try and get it answered here, if not on this show, but the coming ones. So what is our first question of the day?
How do I choose which stocks or assets to trade? Ooh, I like that. I like that a lot. And it's let's go back in time, right? Let's go back in time. So I started on the retail consumer desk. Now, that's a really easy place to start because I was used to going into Marks and Spencer's. I was used to going into Tesco. So I felt I had quite a firm grasp of the product, the consumer, and, you know, even got down to trading things like Ted Baker. Remember that? French Connection. So, you know, that was me thinking along the lines of, right, where do I think I at least am up with other people that are trading it? Right? Now, as soon as you start reading research, you start to increase your chances of, you know, let's say beating the market. Because we've said it before, you know, a monkey, not monkey man, but a monkey could just toss a coin. Can monkeys do that? Could throw darts at a dartboard and you'd have a 50-50 chance, right? You're trying to increase your chances up to 60%, and you'll be one of the best traders in the world. If you can get to 65, then that is everything. And what I'm trying to get at, I still make mistakes, right? I almost made a horrific mistake in Intel yesterday, but I think it was actually a great opportunity, which I'll come on to later. But try and just find the sectors or the commodities or the products where you don't just feel like you've just got gut instinct, right? Because I don't think that's going to help you. Find where you think you understand it better than the average person and you increase your chance, because you don't want to, as we've demonstrated with Pega, you don't want to just get onto a Delta Airlines flight and think, this is terrible, I'm going to short the stock. No, because that's probably already priced in. You want to try and find somewhere you've got that advantage. Now, I've traded the mining stocks for 20 years, so I feel like I know the mining stocks well. 18 years, sorry. I still make losses, right? I'm still wrong at least 35 to 40% of the time, but I know how to manage those losses. So, excuse me, so the easy answer is choose the stocks or assets to trade where you feel comfortable, you feel like you've got good knowledge on them, you feel like you understand the technicals, and then also in market measures today, we're going to look at what are those stocks where people are most likely to lose their trousers.
Yeah.
I was going to say pants, but then I remember that, you know, we're not in America. So,
we
you know,
say pants here
the
in a different way.
your pants.
Pants.
Yeah. You don't, well, I personally don't want to be trading those stocks that are completely random, right? The Trump medias, the Teslas, the GameStops, right? No, none of that enters my portfolio because there's too many people trading those stocks that don't know what they're doing.
Too many punters.
Too many punters. Therefore, they don't follow what they're meant to do. They don't follow the fundamentals. Therefore, I know that I don't have an advantage there.
And Rich is totally right. I would also go as far as saying not just what you know, but also taking a look at, I like stocks that I can have a pair trade. Mm-hmm. And because the guardrails are important, you don't want just to just run on something. And so if you have a hedge and you know the industry enough to also hedge your position, that is really the best way to go. Not only doing your homework, but also being at the events where you know you're more than anyone else out there to gain an advantage just by being closer to the people or the industry. That also really, really helps. But for me, it's like the first thing I think of is can I pair this? Can I hedge this somehow in case the trade goes against me?
And Angeline's exactly right. If you work in retail, right, look at retail stocks. Obviously, don't trade the one that you work for.
Yeah.
But you know, I know the guys at Nike, for example, they trade Adidas, they trade Foot Locker, because they feel that they're an expert in their field. So if you work, we had one of our TikTok viewers. She previously worked for Walgreens Boots, right? And so she knows the business. She knows how terrible it is, and has since moved on. But you know, she doesn't have any lockup. She knows how to she can trade that stock legally, and is happy to short it.
I do also like the fact that you know, loads of people come on and say, "Hey, Ange, hey, Rich, you know, is there a particular sector that's easier than others?" I mean, there is no magic bullet, is there? There is no easier sector. It's just really what you know, and the more you trade it, the more research you do, the better you're going to get at it. There's no magic around it.
Absolutely. Now, as Ange says, you can also, an easier way to do it, right, is to look at two stocks and do a pairs trade. So you hedge yourself, you hedge your risk.
So oil and airlines, for example.
Oil and airlines, or you can see here, Eli Lilly is one I'm looking at because it's been particularly weak recently. So here I've plotted Eli Lilly against Novo Nordisk. Right, and those two, you can see that they're moving kind of in tandem. Okay, Novo is the red line, and the candles are Eli Lilly. And you can see that they move in tandem. So, you know, if I think that Eli Lilly is oversold on the cut in guidance recently, do I want to hedge that with a short Novo's position? It would certainly take, in theory, it would take a lot of the risk out. Because if I go back further, you can see that they both come up together all the way. Do you see how closely correlated they are? Until about here. So that's going back to, of course, July last year when all these drugs started coming out or being focused upon. Great, right.
Right.
Next question, please.
Next question, producer Fred. Rise and oh.
There you are. Rise and shine.
What is diversification and how does it reduce risk? Now, we talk about this a lot with our clients, especially when they come here to spend a day with us here at IG. I highly recommend you do this because it's great. You go with the analysts, you spend time with Rich and myself here, you spend time with the PCMs here, you go across most of the desk here to see how we do what we do. Diversification is more than just, you know, making sure you don't have all your eggs in one basket. It's also about, and we talk about this a lot, guardrails and when to trade. To me, Rich, is also diversification. So, for example, in my own pension portfolio, I've gone with the, at the moment, I've gone with the 60% stocks and then 30% safer, like fixed income and what I call safer investments, and then 10% perhaps gold, silver. And I've done that purely because that's my appetite at the moment. This might change after we find out you know, whether it's Kamala or Trump. But at the moment, that's my kind of where I'm comfortable with. If I see more uncertainty, then I will actually decrease the stock element and boost the fixed income and gold and silver element. And this I did when COVID first started because, you know, no one knew what was going to happen. Maybe you did, Rich. You were in New Zealand.
That's why I was there.
Time, end of the stars. Right here, it was lockdown, and you know, no one could find loo roll or eggs for love nor money. No one knew what was happening. You know, whether we'd still have jobs or not 6 months later, right? So I decreased my stock allocation and increased my fixed income allocation at that point. When you trade, to me, is also diversification. I've talked about this to Tiffany. I've talked about this to many of our clients, because if you like trading volatility like I do, then the power hour is one for you. The first hour of the European trading day is one for you. But if you don't want to trade that, that is also diversification in when you trade. Once you come out of that hour, if you trade later, let's say the 11 to 12 or 10 to 11 period, you know, a lot of the algos would have come out. The 9 o'clock pre-9 o'clock craziness has happened, and so you're less likely to get volatile swings. Rich?
I think you can keep it a lot simpler than this, right? My diversification is when I go into a restaurant and I look at the menu and I think, what? I don't know what to order on this menu. And so I just panic order and I order one dish and this is it. This is what comes.
Oh,
right? Now that is my panic. That's when you don't diversify. That is ordering one dish.
Is that? That looks
and that
disgusting,
turns
Rich.
up. Exactly.
What is it?
So what is diversification? Diversification is tapas. Diversification is ordering 8 small dishes instead of 1. And that means they're much less likely to get this turning up.
What is that?
Instead of ordering that one dish, holding that one stock that comes out with a profit warning, you can instead be diversified through tapas. Now, this is the whole idea behind ETFs, right? ETF culture has taken off because that gives you that basket of stocks, which is a whole sector, right? I might look at the EVs or the cannabis stocks or the defense stocks, and instead of being in one single stock, which could have a profit warning, it could have management issues, it could have a hole in its account somewhere like SMCI, potentially, allegedly, then you avoid that down 50% move that we've seen in Supermicro over the past week, and instead you would have a basket of everything. That is diversification in a nutshell, or in a tapas shell.
And that's a good point, because I don't really like buying single gold miners. So I hold a gold mining ETF, and that means I get a broad base exposure to them without having broad base or having a single miner slash dish like that really gross one that Rich put up that I'm exposed to. But it's also
no, that's not Andrew's cooking. Don't worry.
But what's also interesting that you bring up ETFs, because fund managers and ETF providers never ever have them on the same table together, because it will get really ugly.
Right, let's jump on to question 3. We think we can get this in. How often should I review and adjust my trading strategy, Anne?
You freaked me out when you said this, and I ended up like a really, when I was working remotely and supporting my in-laws in a hospital hallway, like checking all of my pensions to see whether they were good, and they were fine, thankfully. But Rich said it's like going to the dentist. I try and review. I mean, these are my pensions, once, hopefully twice a year. But now, after your comment, I'm thinking maybe it should be every quarter.
No, I only go to the dentist once every 6 months.
Oh, really?
So it's, if you've got a pension, you've got your ISA, at the very least, you should be thinking of it like a dentist. So, every time you go to the dentist, check your pension. Simple as that. Now, that, of course, is not a trading strategy, right? That's your longer term one. Trading strategies, you really need to look at when things go wrong. So it's more like when you've got toothache, right? You need to just check if everything is running to plan. If suddenly your strategy has gone wrong, why has it gone wrong? What is the what's changed in the world that your strategy is not working like it used to? Because themes change, and themes change quickly. Everybody's been absolutely pinpoint focused on this election. The election finishes today, right? So what's the next theme? After this week, what are people going to start looking at? They're going to start talking about the Santa rally. They're going to start talking about debt, where we're actually going to focus on this federal debt problem that governments have got. What are we going to focus on next? That's what you should be already thinking about.
And that's right. What Rich is saying, if it's a short term, if you're trading, then, I mean, Rich and I, at least myself, on a daily basis and fast moving events, sometimes on, an hourly basis, we're reviewing our strategy. There's also the exciting retail season coming up as well. You know, you got post-Christmas retail season. That's a great one to trade. And so, yeah, keep reviewing. Make sure you check, because things change really quickly.
Excellent. Right, all you people in the comments section, throw us your questions for the next few days. But go and grab yourself a coffee, because we're going to take a quick break, and we'll see you in 5.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Hello, welcome back. It is the Tom Takeover with me, Tom Wolstenholme, and Ange.
And what we also have is a special treat. I was going to say, Tom, what vitamins have you been having? Really, really good today. And, you know, Rich was saying that he's feeling a bit peaky and all that. Maybe you should recommend these pills to him.
It's sunlight and exercise.
Wow, and we know that you do a lot of exercise because I saw you, you know, looking quite fit, running around Dulwich Park.
Yes, I was. You saw me?
Yeah.
You were stalking me?
I was stalking you. You were with your wife.
Oh, I see.
You
Yeah.
also look really fit, by the way. So.
Oh, thanks. No, I've been taking the rich scheme of vitamins. Yeah. After he's got told he looks a bit too red on screen. So.
Yeah, I heard that too. Who said that? I don't remember.
A fan, one of his fans.
So, what have you got for us today?
So it's a big day for America. It's an even bigger day for us because it's our first segment together.
It is. I'm very excited as to what you're going to.
They've kept us apart for so long, but enough's enough.
Enough is enough. You know, yeah. We need to get Rich out of the way. I'm sure he's listening in on this and putting. Oh, there he is.
Yeah.
He can't keep out. He's commenting on the live stream right now.
Yeah, but he's weird, isn't he? Anyway, we've got rid of the riffraff, so that's a good thing.
Come on.
So we're going to talk US election, and we're going to play a little bit of who is more likely to.
Okay.
Normally when I play this, it's more like you put a couple back to back and you ask them questions and they have to drink and you see who thinks they're, you know, who's the better at whatever. But we're obviously not going to do that. We're going to focus on the election. And we're going to look
at the drinking bit.
Tonight we'll do the drinking version.
Okay.
But we're just going to play a quick bit of who is more likely to. So we'll run through a few things and we'll see who you think is more likely to or better at and that kind of thing. There are obviously only two answers. James, remind you who they are. One's Donald Trump, the other's... No, Donald Trump is one, Kamala Harris is the other. Rich normally writes them down on a piece of paper. Yeah. Even if there's only two options, just write them both down so he remembers what they are.
He's very good. Don't knock his little notebook. He loves his little notebook. He has this black leather-bound notebook that he scribbles into every now and again. You know, very endearing.
It's getting old. Can't remember simple things.
So
there's only two things. We'll run through a few. Who do you think is more likely to? Okay, so first up, who is more likely to be more supportive of the oil and gas industry?
Oh! Trump. Drill, baby, drill.
He has said that, I believe, yeah.
Yeah, and I think that, to me, if he gets in, he'll be good for Chevron. He'll be great for ExxonMobil. He'll be great for stocks that basically in the US, the oil majors there have stuck to their drilling, exploration, right? Whilst the Europeans, like the BPs and the Shells, they've all gone with, yeah, we're all going to invest at least or show that they're investing into renewables. But the American companies, the oil majors there, are more kind of, we're going to keep drilling people until we get stopped, but we're going to maybe invest in some moonshot small projects like carbon capture that may or may not take flight.
Okay, so Trump better for oil and gas, and then on the flip side, Kamala?
EVs, renewables, solar is my take on that.
Okay. So apparently he's pledged to drill, baby, drill, and roll back environmental regulations that limit fossil fuel expansion. Okay, so we're going pure Trump on that one. That makes sense. Who do you think would be best for disclosing UFO sightings?
Trump.
It's got to be, right?
Yeah, got to be.
He loves that stuff.
He loves that stuff. He loves that shit. Anything controversial, anything that you can't prove, anything that is wacky, you know, what was it during COVID? He was advocating at one point, like drink chlorine or something.
Bleach.
Bleach, thank you. That was it, bleach.
Yeah.
And some people actually did. What does that say, Tom?
He likes to whack it. But I don't know about you. I'd like to see the UFO stuff. It's always rumored. You never get to see it. I want to see it.
Look at you, Tom. Are you a secret, like,
I'm just.
You're going to say you've been to, what is it, District, no, something 13? That's
Area 51.
Thank you. There you go.
District 13. I think that's a different sci-fi film.
Oh, yeah, that's the one where he gets turned into a bug or something eventually.
Robot type thing.
Robot,
I think.
yeah. Somewhere set in Africa. Have I got it right?
Yeah, I think you're right.
Thank you.
Good knowledge.
Cam is
Good
like,
knowledge.
"Oh."
Thursday we'll do a movies version. You've already touched on this, but
I can't, I'm not good. I can remember scenes, but I'm not great at remembering the, like, actors or names. Like, I remember the scenes.
okay. So if I maybe next time I'll act a few out, and then you don't have to know the names. You can just tell me what it is.
Okay.
All right.
Okay.
I'll make a note.
Okay.
Okay, we'll do that one next time. You've touched on this, but who is more likely to be positive for electric vehicles?
Oh, I spoke about that already. So I think it's going to be Harris, Kamala. She's really flown the green renewable flag, and you know, talked about how, you know, she will be the climate vote. You know, so solars, energy, wind turbines. If you fly from the Tasty office to Michigan, you'll see wind farms pretty much everywhere, but that is only a small part of the US, and she's pledged to be greener and to drive that green vote.
Okay, and Trump, I imagine, not so bothered.
He's kind of like, we'll just be happy for now, and we'll drill, and you know, he's already said this is going to bring down inflation. It's, you know, he's really calling out and speaking to the, you know, the middle American that wants prices to come down, right?
Yeah.
And one easy way for him to do that is to get prices at the pump down.
Okay, so his way of tackling inflation is focused purely or mainly on oil.
Yeah.
Okay.
It's my take on it, my home.
Is your take on it? Fair enough. Cool. So, who is most likely to nominate a minister of memes?
I don't actually know, but I'm going to guess. I think it's going to be Trump, because there's this whole thing with Elon Musk joking that he's going to be appointed a minister if Trump wins. He's certainly been, you know, on the Trump camp, and he's also been trying to lift the profile of Doge, you know, the
the coin.
Yeah, by saying, you know, repeatedly, I believe, you know, he's going to be elected a minister of Department of General Governing Efficiency.
Governing efficiency, okay.
Yeah.
He governs the efficiency.
Yeah, I think that's right, isn't it? Caleb, have I got that right? Yeah.
Okay, so there's a job in it for Musk.
Yeah, and that's why he's like been on the campaign trail saying, vote Trump.
Yeah, I've seen his dances and things. Yeah, he's not a good mover really, but he's enthusiastic. That's
He
what
is
he's
enthusiastic, yeah. So is that the answer, the meme?
Most likely to nominate a minister of memes. You're going from Trump. I think you're probably right. If there were to be such a thing, it probably would be him, wouldn't it?
It'd be ridiculous, but you can see him doing it, right?
You probably could see it doing it. So, all right. Most likely to, we had a lot of Trump so far, actually. Most likely to be positive for NATO and European relations.
Oh. I'm going to say Kamala, because Trump has said in the past that he is really unhappy with NATO because they are not pulling their weight, and the US has been putting in the most money, and other nations should put in, you know, more money, or at least, you know, bring it up to the same ratio. And he has several occasions, I'm pretty sure about this, threatened to pull out of NATO.
Okay. So it's got to be Kamala then.
Yeah.
And I know that Harris and Biden have emphasised strengthening alliances with NATO and Europe, whilst Trump has typically probably been a bit of an arse about it.
Yeah.
Suggest they could withdraw,
Harris.
that kind of thing. You're going Harris? Totally agree. Okay.
Asked by a viewer, Monkey Man, saying, I think Tom should dance. And that's why I went, yeah, I do too, because I think he'd be better than Musk, definitely.
I would be. I'll practice and I'll come back in with it.
You're gonna wear something snazzy as well.
I could wear something glittery, do a bit of dancing.
Love it.
Maybe a little hat.
Don't like you.
Like a good little performer. Thanks for the tip. Okay, next up, more likely to, or who would be better at inflation control?
Harris, because Trump is all about spending and making America great again, and the fastest way he can do that is to spend and create jobs and get inflation down by drilling. And I mean, he's shown in the past that, you know, the economy did grow under his watch, but, you know, at what cost, right? And I guess if you're not too bothered about, you know, fiscal responsibility, then he'd probably be the person that does.
Okay, so, okay, you reckon Harris would be better for inflation control, despite what Trump says about...
Yeah, Trump is just going to, you know, make people in the short term happy, but, you know, fiscal control out the window, you know, long-term government debt, you know, who cares about that? I'm not going to be around long enough is probably Trump's view.
Fair enough. I think that makes sense.
How old is he anyway?
I reckon, as a guess, 68.
Oh, well...
I don't know, though.
Director Caleb was saying 78. How old is he? 78.
Oh, wow. And I said 68. So he looks good for his age then, I think.
Yeah. Wow.
He's been taking the...
He's had a lot of work, you know?
Do you reckon?
Yeah.
Or he's
also
on...
I mean, who has that kind of skin color?
Rich.
I hope Rich.
Maybe they take the same vitamins.
Maybe they take the same vitamins, yeah. You're a healthy tan. You're not orange at all.
Oh, thank you.
Yeah, yeah.
I appreciate that. I'm wondering how long it'll be before I have to do the kind of the Trump mega comb over. You're probably not far off, but, you know, we'll see.
I have no idea how he is looking like that at 78. Are we sure about 78, guys, in the gallery? They're saying definitely.
They're sure. They're sure.
Look at his picture. Yeah. Trump. I don't know whether it's a recent photo. Trump election. I mean, he also looks good for someone whose ear has been blown off, right?
Yeah, marginally.
Right. So, what next? What is my next question?
Your next is, who is better for, or who's better for defense spending?
I would say Harris, because Trump is likely to say, well, if he continues with his anti-NATO rhetoric and, you know, I don't want to spend any more money, we're already putting in more than we should, he's not going to put any extra money to that, right? I mean...
Sure. I mean, he's been a vocal advocate for increasing defense spending, arguing it supports US security. So
yeah, but only if it supports US security, and I think that is the key.
And that is the key. So in terms of defense spending going up, it'll probably be Trump. Is what you're saying. That seems fair. That seems fair. Healthcare reform.
So healthcare reform, I would say Harris. And I would say, well, there's a toss-up. Healthcare reform or healthcare spending? You want healthcare reform?
Reform.
Reform.
Yeah.
So then it would be Trump, because he's saying the current structure doesn't work, and Obama's healthcare plan was a complete disaster. Whereas I think Harris, if it's for spending and structural, you know, spend, it would be her. But I think reform, it would be Trump, just thinking he'd want to call out to all those middle Americans who absolutely hate the healthcare system. Basically, if you don't work, you don't have private healthcare, you're on the street, mate. And if you try and, you know, even they don't have any social security net, and if you haven't saved enough to get yourself healthcare, which is super expensive. I mean, I'm talking about crazy expense here where it could really bankrupt you if you didn't have any private healthcare.
I mean, the other option is obviously do what Walter White did in Breaking Bad and grow a meth empire, because that's what he did. Also, another successful kind of American story. You see Breaking Bad?
No, I haven't.
Oh, well, then you've got no idea what I'm talking about.
No.
He couldn't afford his medical bills, so he started a meth empire very successfully. Obviously, that has its...
Should I watch it? I've heard a lot about it. It's just that whilst
It's
I'm on the shift,
fantastic.
working so hard with Rich, I try and avoid anything that will keep me up late. You know, like I couldn't. If I watched a series and got hooked onto it, that'd be like the end of.
And you'd be late for work.
I'd be late for work.
Well, okay. Well, in that case, don't watch that one, because I'd say that's
addictive.
That's my favourite one ever, I think, yeah.
Someone said, Ange, you really need to understand what the hype is about, what and why Stranger Things really made Netflix. I made the mistake of watching Stranger Things and I lost 2 weeks of my life.
Lost or, you know, or enjoyed?
I had pizza in the hair and like, I really think we need to stop watching this right now.
Turned into like a crazy cat lady.
Yeah, well, I have kids. I have a full-blown family, so it was disastrous.
And they haven't been fed. They haven't been to school.
Yeah, people running around, you know, unwashed, that sort of thing. Yeah. So,
in that case, I was going to suggest you watch it. In that case, I'm going to suggest you don't.
but how long will this take me, Tom? How long? Quantify it. It's just like a trade. You need to quantify the entry and the exit. How long to finish?
All right. Entry today. Put a stop at where your kids are starving.
Okay.
You could probably
eat a lot. That'd
be
like
be done in a few weeks.
tonight.
It could be done in a few weeks, I reckon.
Okay. A week.
Oh.
2 weeks.
2 weeks, I reckon.
2 weeks. Okay. My kids starved to death.
But only if you've got the capacity to. I don't want to be the reason that, you know, your household goes into disrepair.
Or like Rich comes in and goes, where is she?
Yeah. Exactly. Yeah. We don't want that. We don't want that. Cool. Okay, you touched on it a little bit, but better for renewable energy.
Oh, we talked about this already. So Harris, definitely.
Harris for renewable energy.
Because, you know, she's had to differentiate herself, right? And the only way to differentiate herself from Trump, who's like drill, baby, drill, is to go the other way. I'm sure the Democrats will still have to appease middle America if they got in. So I think she would have to probably relax the whole... yeah, we said renewable energy, but we will also, you know, continue to support the ExxonMobils, the Chevrons, just to balance it out. So, but I think if you want one answer, it'll be Harris.
Got to be Harris.
Got to be Harris.
That's what I wrote down as well. So we're on the same page there. She's promoting renewable energy as part of a shift towards a clean energy economy. Cool. Last couple.
Also, Barack Obama has been definitely, you know, bigging her up ahead of the elections, right? And I believe Trader Friends, correct me if I'm wrong, my memory wasn't what it was, but he said, we are the first generation to face climate change and the last generation to be able to do something about it.
Catchy, kind of catchy.
Barack Obama, you're listening to Tom, he's kind of catchy.
Well, it's kind of catchy. He could shorten it a little bit. And it doesn't completely work.
It could be a bit more succinct.
A bit more punchy.
Yeah, a bit more punchy.
For example, yeah, you've said the oil one quite a few times, and that's clearly more catchy than something about a generation and the first and the last.
It needs to be shorter.
Shorter, sweeter. I'll get him on the phone. I'll let him know. Or maybe he watches, so maybe in which case he'll find out anyway. Last couple. So better for US-China trade.
Oh, Harris, because Trump has said, I'm going to slap tariffs on Chinese goods. I'm going to protect America and make America great again. So I think definitely Harris be better for China-US relations because Trump has made it no secret that he is going to back middle Americans that kind of say, you know, a lot of our problems stem from, you know, China, and they're trying to flood our market with cheap steel, cheap autos, and the like.
Okay, so you reckon a more diplomatic approach from Kamala would be better for US-China trade?
And relations.
And relations. Okay, the female approach.
Not the female approach, but the fact that she's not starting off with, we're going to slap tariffs on you.
Okay. which is obviously a harsh stance to start on, isn't it? So, okay.
And that's what he did the last time.
All aggression.
Well, and tariffs.
And tariffs. Okay, fine. Cool. In terms of an important one,
I'm drinking whiskey, by the way, just to cope with Tom's quiz here.
who's more likely for who's better for federal debt reduction?
Harris, because Trump is not concerned about debt whatsoever. I think his view is that, you know, we just have to get things done.
Just get things done.
Yeah.
So Kamala for that one. And your final one, to round us off for the day, who is best for tech regulation?
Tech regulation. It would be, I would say, Harris, because, you know, Trump, and I can see Trump, you know, having Elon Musk as minister, if not his right-hand man. Musk has made it no secret he wants to be like, you know, the tech guru in that administration. Goodness knows what deals they've already cut. And I've been told time's moving on, so I would say tech regulation would be Harris.
Okay, very good. Well, we've pretty much covered...
How many more minutes have we got, guys? No more minutes.
No more minutes. Well, it's been a pleasure to do our first segment together, and hopefully not the last. and I'll get my dance moves ready.
And Monkey Man wants you to put on an outfit too.
Outfit and dance.
Yeah.
Okay, so some kind of
Not that he's asking very
performing
much.
clown. Okay.
I love it, love it. So how did I do? Do I get to know how did I do?
This isn't a score-based one. This is more of just an opinion-based.
Oh, here I was being like, I want to score. I want to beat Richie Rich here.
But there are no right answers to that one. If you want, we'll do another one where there are right answers, just to encourage even more competition.
Whoa, I love competition.
Great.
Okay, thank you very much for joining us. We'll see you back again very soon.
Great. See you soon.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options. A hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right, but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price, called the strike, before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Hey, welcome back, and we have a special new guest for you. Not new to us, but new to our viewers, and they're all very excited. It's Monty Safieddine, all the way from Dubai. Welcome, Monty.
Great to be on the show, guys. Was really looking forward to this for quite some time. So this is an exciting moment for me. Actually, the best part though is this is the first time going live. I got to see this ear thing. The ear, I never did this before, but when I was a kid, you know, when you watch the local news and they go going live to our correspondent, Tom, can you hear me? And then he goes, he waits. What's going on, guys? Yeah, I can hear. Yeah, that's right. Here talks about dangerous raccoons in some park or something. I've always wanted to, like, I never thought I would be on the other side of that.
Monty, you could be on Tasty Live straight away.
And also, yeah, definitely. Also the fact that, Monty, did you, as a kid, also kind of like, hey, copy that? You know, it always felt a bit like you were some kind of like
that you would do
spy.
When I wear the suit. Because I'm usually in a suit, you know, that's kind of like,
it's
that's
so
kind of
hot
my,
in Dubai. How do you wear a suit?
It is, but the thing is, you know, for like TV interviews and stuff, I got to wear the suit. That's like my uniform. That's like, you know, when I put it on, like there's a voice inside me that goes, I'm Batman, you know, like that's my cape and gown, so to speak. So like when you're talking about the copy thing, that you do that with the, you know, the secret, they do it with the thing, like copy that, like that. That's how I do it. You know, it's more like that. Like, yeah, can you hear me?
Roger that. So Monty, give us a run through. Who are you? What do you do at IG? How do we have such a brain in Dubai doing our weekly reports and such like?
Yeah. So Monty Safieddine, market analyst at IG Dubai. So I've been in Dubai. I've been here with IG for about over 5 years now. Interestingly enough, I came to Dubai for a 2-week financial workshop 14 years ago. So one thing led to another. I was only supposed to be here for 2 weeks. I packed for only 2 weeks. One thing led to another. And here I am. Throughout the period of time, it was like, because it was a financial workshop, and then it's like there was this hedge fund, and they're like, you know, we'd like to have, you know, they wanted to take me. I was like, okay, I guess so. I'll talk about my background in a second before that, but like, okay, I'll take that. And then at the moment I joined, I think like 2 months later, their clearing firm was none other than MF Global, which went down.
Oh,
so like
no.
all the funds, like, yeah, just my luck. And I kind of thought like, okay, that's it. You know, what the heck's going? And then someone from there is like, oh wait, there's this other, you know, because you know this certain software for you know, algo and hedge funds or whatever, we want to take you, there's this other firm. And then it turns out that firm I was on the trading desk of a firm, which turned out to be a brokerage. And that's how I got into the CFD industry. So that's how that was that. And then my background, so I'm born and bred in Michigan, which is a swing state, by the way.
It is.
Yep, that's right. My
Have
vote
you
may make the
voted?
matter.
Have you voted, Monty?
No, I haven't, even though it's a swing state and it could come down to me. Yeah,
It could
I know.
come down to
Yeah.
you. All my cousins in Michigan, because I just came back from visiting all of them there, you know, in Detroit, Canton, Dearborn, and they voted last weekend because they could vote from the 26th.
Wow.
Yeah.
You're making him feel bad, Ange. Come on.
Well, hold on a second. To be fair, the reason why they probably voted early was because they wanted to get it before the snow gets in the way. You know how much snow is there. It's just so annoying. So they probably just said, okay, let's vote early before the next snowfall, the next, you know, two feet of snow. So anyhow, Michigan, yeah, that's where I'm born and bred. And then I studied economics. I used to lecture economics, believe it or not. So economics background. So, and then I got into finance. When I did the workshop, that kind of, I was like, oh, let me, and then that kind of, anyway, that's a long, we'll keep that for another time, but that's it in a nutshell. Yeah.
So Monty produces one of the most awesome reports that I've ever seen for IG. And I love this weekly sentiment report because it gives us a sense of how sentiment is shifting. So whack it up there, guys. There you can see Trader Friends. And it looks like this, and it gets sent out to all our clients. Talk us through it, Monty.
Yeah, so it actually started about 12 years ago. No, not 12, actually. When it first came, it was about 13, 14 years ago. I started inputting sentiment. I was looking at patterns and predominantly the euro. And this is just on my own sort of thing. I was just inputting the data every single day, and I was sort of monitoring it and seeing the difference and trying to find patterns and things like that. And then afterwards, you know, when I started to produce some of the reports, not necessarily a sentiment report, but like the other reports that I do with regards to levels and overviews and things like that, then afterwards, it started to pick like, oh, can you add this market? Can you add that? And everyone wanted to have these markets. So it was about 12. And then at the start of this week, this report and the daily market report got revamped. And now it's at 28 markets. And by the way, you don't have to scroll. You can just click on the tab and it'll take you, if you're using the PDF, you just click on the tab on the front page. It'll take you to whichever you want. Because I had to set that up this way because of how many pages there are now.
Run us through, Monty, exactly what the circles on the right-hand side are showing us.
So this is the US 500.
Yeah, S&P 500. So the way it works initially, it was, you know, you had IG client sentiment, right, which is pretty straightforward. Now that I input that one in myself, I've been doing that for, you know, for years now. You know, from I want to say about 7 years when it comes to S&P 500, but essentially, you know, inputting it every day. So what you're seeing there, the outer circle is this, because this is the weekly sentiment report, not on the daily market. It's a little bit different. We can talk about that one later. But the weekly sentiment is the outer circle is where clients are positioned at the start of this week. The inner circle is where they are positioned at the start of last week. So when it comes to the S&P 500, IG client sentiment, 57% short at the start of this week, 63% short at the start of last week. Now, the reason why I like to put it this way is because it's not just about where traders stand, it's about how they got there. And that's the reason why I mapped it onto the chart, which I'll get to in a sec. But if you want me to go through the remaining three circles, the institutional sentiment is taken, and the asset managers and leveraged funds, that's taken from the COT report. It's released every Friday. Positioning is as of last Tuesday. So it's a week on week kind of situation. The client sentiment gets inputted every day, but on the weekly chart there, you have weekly with sentiment and daily with sentiment. For the weekly, for the COT speculators, the green dotted line is for institutional sentiment, and then I put leverage fund, which is the purple dotted line. It's as percent long looking at the left axis. So the right axis is the price, okay, you know, 58.60, 56.60, but look at the left axis, 60%, 50%, 40%. That, if you look at the dotted line, it'll tell you, you look to the left axis, it'll tell you where they were at that point in time. And the 50-50, that black line you see right there, that's the 50-50 line. Whenever the dotted line is above, that means they, whether they're clients, which are yellow dotted, or institutional sentiment, which are green dotted, or leveraged funds, which are purple, they are majority long whenever they're above it. And whenever they're below it, they're minority long, which means they're majority short. So I put that in there so people can know exactly when they shifted from majority long or net long in the case of COT speculators to net short, or in the case of IG clients from majority long to majority short.
And can I ask,
that's on the...
So how do we get the institutional asset management and leverage funds? Are leverage funds hedge funds?
So the leverage funds, and then you got the thing is with the asset managers, you probably noticed with all the indices, you see that they're generally long, right? I mean, that's when you're talking about the asset managers, right? You're looking at leveraged funds, leveraged funds, right? And then institutional sentiment, by the way, is you're taking an overall figure. That's from it's two separate reports from within the COT figures that they send out. So initially, I used to just put before last week, I used to just put client sentiment, institutional sentiment. Some people want the breakdown. They want the details on asset managers versus leveraged funds, and that's the reason why I added those two in there. So in terms of the circles, and I plotted the three that I plotted: IG client, institutional sentiment, and just because it's always interesting about where leveraged funds are, I put leveraged funds in there as well when it comes to the chart. So that's when it comes to that, and then you got that little table above, which if you could scroll up to the top. To the first front page, or click on the home page to go back to the home page. Yeah, if you click on the guide, click.
There we are.
Click on there. There we are. Now look at the bottom left. Now this is my classification of what's considered. The middle is straightforward, 50-50, right? We can't argue with that. But if it's like 52 or 53%, does that mean, the majority buy, I want to go with the majority or against the majority? If it's in slight buy or sell territory, there isn't much of a signal there. And I usually classify that as from 51 to 54 to the buy side, 51 to 54 to the sell side. You've got moderate, which is from 55 to 64. Heavy starts to get interesting from 65 to 77, 78% and above. That's when you're hitting the extremes, and predominantly when it comes to client sentiment. I know because on our end, when we look at clients, they're trading this volatility a lot more actively. Institutional traders, from what I've noticed, they're usually positioning, and you also have to factor that when it comes to things like the S&P 500, US Tech, there is a matter of them hedging some of their physical shares portfolio, if that makes sense.
Yeah.
Whereas I've seen a much better or stronger correlation with the Dow, which is why I always like to look at the Dow when it comes to what the speculative side are doing. I know it's the whole COT speculative, but I always like to look at the Dow more closely when it comes to that, because even when it comes to clients on our end, because the S&P 500 is a bit too consistent in its movement. We don't get that pure speculative action that you might get with the others. And by the way, if you want to go back
to the CO2, sorry, Monty? The COT?
Commitment of Traders report from the CFTC. So it's available. It's public information. I break it down this way. There are people that break it down in different ways. I do explain the difference in the lot sizes. By the way, if you want to go all the way back up, Angela, click here to top right corner. Yeah, I had to put, there we go. Yeah, I put that there just to make it easy for people to go back and forth because there's so many pages now. But so Commitment of Traders from the CFTC releases every Friday night our time, Dubai time. So I update everything on Monday. So I update the weekly sentiment and update the daily market with those figures. But if you want the client sentiment, then that's day to day on the daily market report.
Now, Monty, how do clients make money from this?
That's the
$1 million question.
That's why he's sat in Dubai.
Yeah.
We're here in London.
I was going to say $1 million question, but if you add nowadays with inflation, you might want to add a few zeros, maybe say $1 billion questions by default. But yeah, the $1 billion question. So interestingly enough, there are a couple ways to go about this. And I suggest when it comes to traders, because a lot of times people go, okay, majority are long, for example, let's say client sentiment. So I want to go opposite. Well, hold on a second. On average, from what I've noticed, clients are actually right. Markets actually go on average in their direction. Not every asset class. I will break it down because the psychology differs from for different asset classes. Crypto by default, they're usually long. Precious metals by default, they're usually long. Gold has been a bit of an exception. Indices, they try to range trade. The question is always when it comes to indices and FX is where am I looking to trade the ranges by default? The clients are asking that. Whereas when it comes to gold or oil, where do I buy? Or crypto, where do I buy? It's always a buy question. So they're always the excuse is always to try and get to the buy side, which means if you're trading, you got to note these differences because you don't want to just go in and apply the same sentiment analysis from one to another. But if you are trading, I would suggest don't try and trade both for and against at the same time. So if you want to go with the majority, okay, find strategies that go with that. And if you want to go against, and you're always looking for opportunities to go against, and I'll give examples in a moment, but if you always want to go for examples, go for cases where you're going against, then do that separately. Don't try and do both at the same time initially, because you're just going to get confused about, long or short. But if on average they're right, the issue has always been that we as human beings, and this of course comes to our psychology a little bit, but we like to take profit very, very quickly, right? And we like to hold on to losses just because of our nature. Our nature just, we don't like to take on a loss.
And people's egos as well. They prefer to think they're right rather than they're wrong. And when you're wrong means that, we judge that by losing money. Therefore, you'll keep with the loss until you come right. which is just ridiculous. You got to take your ego out of trading because it's your biggest hindrance to making money.
I did that with AB Foods this morning. Monty, the other question I'm sure our trader friends are all thinking is, can we use this sentiment report in any way to look at entry and exit points in terms of timing?
Yeah, so here's how, like, for example, if you think the majority are right on average, they're doing in a particular product. Like, for example, if they're long and they like to be long a certain market and it's always trending lower, then be careful, because the psychology is going to differ. So if they're always like to be long on average in gold, for example, there have been a few exceptions as of late, but if they like to be long and all of a sudden it gets hit or whacked and it starts to go lower, you want to be very, very careful about saying, I want to go with the majority. I want to go with the majority. Well, you're in a bear trend, so you're going to be wrong. It's going to be loss after day after day. You want to be very careful. But when you're with the majority in a situation where on average they're right with a certain market, the idea is that, like Rich was saying a little bit earlier about how, the being wrong, it does get also psychologically taxing. So when the market does move in their direction, you see them, the mentality switches from I need to make money to I need to not be wrong and get out of my position as soon as possible, which means there's more follow through if you can take it further. So if they were in the right and then it starts to pull back and you see clients start to get out, you can wait a minute, maybe they're getting out a little bit too soon. Maybe there's more follow through. That's if you want to go with. Of course, if you're going against, then you're looking for situations where, again, you want to be careful about whether you're going for limited, you're going for a breakout strategy, but limited take profit, or you're going for a full-on trend. But if you're going to go opposite, then that's where you actually have the comfort of saying, okay, I'm going to go for a little bit more against on the squeeze until I see sentiment really get pushed to the extremes, and then I want to start maybe take profit around those levels and be a little. You're going to have those final squeezes where they go up, but maybe it'll just be for limited profit. It won't be this. You're not going to see a significant amount, because eventually they're going to get burned. They're going to start getting out as well. So that's that.
So the perfect scenario is where there is a popular stock that is very well held. Something negative happens, and those people, the stock moves down or commodity moves down. So those people are then in loss, but they don't cut it. It then gets back to their level and it's still well held, but you start to see the ownership drop because they're like, oh, we're back to flat, get out, get out, get out. But then you think that there could potentially, this data could show there's a real chance here.
When you look at historically, and that's the reason why if you pull up any of the markets where you see the dip and you see the sentiment go up, and because shorts get out, longs initiate, and they come back up, and sometimes they're not exactly at the same level they were before, because don't forget also, Rich, that some of them, when it drops, they're averaging their way out, so they can actually get out at I'm not, by the way, I'm not recommending you average at all, by the way, not at all. That's a very, very dangerous, but I'm just saying that what they'll do is if they're starting to average on things, then you'll see that as it starts to recover, they now can get out and get out of this stressful situation at a lower price point.
Exactly what I did in Intel yesterday. Exactly to the T of what I did intraday in Intel yesterday.
Selfishly, Monty, can we have a look at NVIDIA? Because I noticed on your docker, you've got NVIDIA with the weekly and daily sentiment wheel. Can you talk us through this? Because, obviously we've had so much on NVIDIA recently. Some people calling it as toppy and it's ready for the bubble to burst, but others saying that the trend is your friend and it can continue up, and it's a secular growth tech economy, and even though they've had high valuations, it's got further room to go higher. What does your chart tell us?
Okay, so first I want to point out, by the way, you guys are probably looking like going, what's going on with the yellow dotted? That's IG client sentiment. Why is it jumping up there? Because I don't have historical data from before that. So on NVIDIA, there are a few markets on this report. NVIDIA, Russell, I think it was natural gas, and one more, which it emerges from the 50-50 line, because I don't have historical data beyond that.
Right.
So for the rest of the markets, other than out of the 24 of the 28, if I recall, I've got the historical data. For this one, I started just because a lot of people wanted me to add these, so I started to work on adding them and getting them with the revamp. When it comes to single stock big tech, by default, they're heavy to extreme buy. That's what we've seen generally. And if you want a good example of this, Tesla, I think it's the one right after this. So if you go one down to Tesla, Tesla, with the exception of that period right there where it's over there, but generally you look at Tesla and the story, you can see all the way back to 2023. I even have data early in that as well, and it's been a story of generally majority buy. When it reached a peak, I did see them shift briefly to slight sell, and they went back to majority buy again. So there were a portion that did time the top well. I think what I'm noticing difference when it comes to Tesla versus when it comes to Nvidia. Look, Tesla is a very exciting stock, and I know a lot of on our end it's been very popular and things like that. But when it comes to Nvidia, it's not just a matter of, I'm seeing a lot of interest from there's a trading side, but then there's a lot of interest from the investor side, and they don't want to let go. They're just looking to keep on piling in.
Yeah.
They see it as, if they see it as the next, the .com or the next, not .com like bubble, but like as in, the next Amazon, Google kind of .com.
Sure.
They see that, they see that, they definitely don't want to miss out on it. And in fact, even when things are getting very, very troublesome in the financial markets, even those who are supposed to be bearish are coming out and saying, watch out for this, watch out for that. Okay, are you getting out of the market? No, I don't want to miss out on a rally. Oh, there you go. Well, thank you very much. That's kind of what we've been seeing time and time again when it comes to all this. And I think Nvidia is one of those where
they don't want to miss out on an evolution that is in play. Is the
someone out
belief.
there might go, someone out there might go, well, the valuations or this or that. But here's the thing: if the others aren't going to get out, then we have a serious problem, right? If you want to start shorting the market, right? So if you're looking to short, you got to be super cautious because it's heavy to the buy side. And if you're saying it's getting a bit high and then it's time to take profits, but you'll notice though, where that dotted line is going up and down, it's a very, very small portion who are trying to range trade it. And this is kind of how you'll know with any certain market how much we have traders on our end looking to range trade it. So see how the market went up and the dotted line kind of came down and then the dotted line started to go up again. That's their long buys coming down, longs getting out, shorts initiating, and then it comes back up. So those shorts there, they did make money, and you see the longs, and then you see the long as the price comes down, shorts get out, longs initiate, and it starts to come back up. Depending on how large that variation is on the market, then you'll know how large a percentage of clients on our end are actually trading that volatility in that market, right? So that's another indication.
Now, Monty, as a client, right, you now look at 28 markets. What I want is somebody to slap me in the face when something really big happens. I want an email that says the two biggest things to watch this week are. This is what I've noticed. There's been a huge change. How do we get that kind of headline into it?
And what I'd love to, Monty's like, dear Lord, these two don't ask for much, do they? What I want, Monty, is not just these are the two stocks, huge change, but this is a 6-week heads up or like a 3-week heads up, or this could be a trend that plays out 6 months.
Yeah, so good question. I'm not in the studio, but I wouldn't have slapped you either way, Rich. So
I can do it for you. Right.
Well, I'm in the middle of the screen, so if you slap, I'm worried I'm gonna
you're gonna get both sides.
Yeah, I'm gonna get hit from both sides. But interesting to note. So you guys are just getting the reports. There's the daily market report. What happens is when I send out the email, I send out the commentary, the fundamental commentary, the data, all that kind of stuff, plus sentiment changes and shifts and where they're reaching the extremes are within that commentary. So I'm putting the commentary in the email, and then afterwards the report gets sent around. I've kind of separated. It used to be all in one, but I've separated this way. What you can do though, if you go back to the report, what you can do is what I've labeled on each of the markets is if you're looking to trade something significant, for example, the IG client.
No, that's the election one. No,
that's the election edition. That's a great report too, by the way. Don't want to hype myself, but yeah, that's also a good one. But
polls and flows, major events, potential impact disclaimer. Right. So listen up, trader friends. If you want Monty's report, you need to be a client here at IG, so you know what to do right after this when we go to break. Sign up.
That's interesting, Monty. You're already getting interest in the comments section. Comment section is asking, how do we get our hands on this? How do we sign up? So you're clearly a man the fans want to see again. Will you come back and join us again in the future, Monty?
Come on, I'm going to say no to you guys. Come on now. Absolutely. By the way, Angeline, you're special. You're on the list. You get the report. Rich, you're special as well. I need to get you on the list too. So send me this. Yeah, that's right.
Can you make sure that he is also on 2 email lists?
I do actually get it because Pete Ward forwards it to me every single Monday.
Monty.
Wait, the name. Wait, hold on. Rich said he didn't know where it came from. The name's right there. My name is right
His
there. But
name
Monty,
is-
do I need to make that part bigger? Do I need to
Yes.
make it? Do I need to put my picture in there? Like get it all like flashy and stuff?
I mean, why don't you? Monty, get the
Right, well,
picture in there. Come on.
Right,
Yeah, I know.
right. I have to
I can
ask you
see.
one very crucial question before you go. Which baseball team do you support?
You're not going to ask him Trump or Kamala. You're going to ask him which
'Cause
baseball
we already
team.
knew that in his.
Come on.
We already knew that in his report, right?
What's the answer then?
Wait, you don't know who I'm voting for?
Also, you
don't
didn't
know
vote. That is like you didn't vote. It will be your fault, Monty. It'll be your
I know.
fault.
I'm registered.
You swing
registered as
state.
independent. I could say this. I'm registered as independent in a swing state, so it definitely counts for something. Yeah.
Whoa, but tell us who you think is going to win, and we'll talk about it next time you're on.
I think.
Come on.
Interesting. 8 years ago, I was asked this question, and Clinton was definitely in the lead. She had big wise, and I thought Trump was going to win it because he's an he's an anti-establishment came off as an anti-establishment candidate within an established party. If he had been in an anti-establishment party, he would not have won. So I actually gave it to him that time, and then the second time I said I'm going to give it to Biden. This time, I think I'm going to give it to Trump, but don't go betting on it now.
Right.
I mean, don't roll the dice
On
with
that
that. Yeah, but
bombshell.
Yeah.
Fantastic to have you on, Monty. Thank you so much. We're going to dip into market measures now. And thank you for joining us.
Hey.
And today's market measures, we're going to switch things up, right? I have asked Sahil to come and look at my current market trends because I'm worried tonight that we get a potential big move and volatility jumps. So I don't want people to be caught unawares. We had a comment on the TikTok yesterday that somebody got themselves into trouble on Supermicro, right? SMCI, huge moves in the last week. I don't want people to get themselves into trouble on this election result if we suddenly get a huge move in volatility. So Sahil has put together a look at current market trends for us in today's market measure. Now, in the last 2 weeks, you can see there the S&P has been down 1% and then down 1.3%, with the Nasdaq joining it down 1.6%, right? That's the last couple of weeks. Then we go to a long-term weekly performance, right? From 2005 to present, the average move is up 20 basis points per week. The positives moves generally up 1.6 to up 2.4. And then you can see very similar on the negatives moves. So when they move up and down, they actually move by roughly the same amount. It's just that we go up more than we go down. Now, here's the expected range that, of course, we get from the implied volatilities. And then this is where we actually are at the moment. So is the upside going to be around that 5,950 level? And is the downside away down at 5,300? That's what this great green line that Sahil puts on is warning us. We got a range of 5,300 to 5,950.
I love a cone. That's some.
That's that's giving you the cone. Now, the IVR, that is the implied volatility rank. He's taken us through 5 different products, and in the last 2 weeks, how have the IVRs looked? Remembering that the higher the IV rank, the more value you can get from selling those positions, right? Selling those, whether it's a strangle or a straddle, the higher the IVR, the higher the chance, the percentage chance of profit.
And this is
that you can
why.
get.
And this is why the tasty guys say they love trading volatility, right? They hunt down the volatility.
Exactly. If you can get that IVR up in the 60s or the 70s, then you've got a good chance. And look at bonds last week, 97%. So huge IVR there in bonds last week, and gold getting up there as well. Oil, the only one that really hasn't been along with S&P 500. Now, 0-day to expiry, the expected versus the realized, right? When have you had a chance to make money from selling the 0-day expiry options? Well, every single day last week, apart from Thursday. But Thursday was a real kick in the teeth because you would have lost more on that one day than you made on the other 4 days, right? That realized loss was nasty. That's why Tom Sosnoff said he did not like the 100-point move on one day followed by a 50-point move on the next one. Right, the quick look at Bitcoin. The Bitcoin implied volatility rank is 35. So we aren't seeing too much volatility, not too much volatility expected in Bitcoin there. Long-term weekly performance, the average move 1.4, positive move up 7.6, negative move down 5.7. So as you can see, we're going through all the trends recently and versus their historical moves, so 2018 to present on the long-term weekly in Bitcoin. Now casting our eyes across the sea, so the yen and the bond long-term correlation. Look at how it is blowing out. So we had a blowout there in mid-2022, and we've also had it moving out for the last 6 months. We've had the correlation between yen and bonds increasing from 0 right up to its highest about a week ago, up in the 60s. Now, this is the chart especially that I asked Sahil to prepare. So the largest movers over the last month of the most traded stocks. So these are the most traded stocks on the tastylive platform. tastytrade platform, most likely to contribute to margin calls if you get the direction on these wrong, right? If you're selling your 16 Delta Strangles, what would have caused you the most pain? Well, of course, it's AMD, because AMD had that bad set of results. So that's down 14%. Estee Lauder, I didn't realize that Estee Lauder had, I'm guessing they had a warning there. But
yeah, they had the same problem that many other companies did with China. And it's all down to weak demand from China. So luxury, autos, all got dragged down by the same thing. Remember, it's October was a bad month for companies with, you know, warnings on China. Yeah,
41%.
Yeah.
Especially painful. And then there is that SMCI down 52%. So just beware. Of course, if you're selling those calls as well, you can get hurt on the upside. So Nvidia up 11% on the month. General Motors up 14, Wells Fargo's up 14, and Tesla down 7. Not sure about that. That's I would question that.
Interesting that you know, Wells Fargo, Morgan Stanley, and JP Morgan are clumped together, because if we get a Trump win, banks are likely to rise. U.S. banks are likely to rise. So, I mean, maybe in the run-up, you know, that's also helped them somewhat.
I know this is from numbers.
Oh, from numbers,
So, yeah, the last month we'd had big positive numbers in the US around Morgan Stanley, JP Morgan. Tesla, of course, that 7%, okay, it's net down 7%, but it's gone up 22% in one day in the meantime. So, a lot of people, including myself, getting hurt on that move from selling calls. Right, now, finally, looking at the earnings review last week, we had Coinbase down 15, we had Roku down 17, we had Peloton up 28%. Just a reminder how dangerous it can be to be in stocks ahead of earnings. So really, like, you know, it is the most volatile time, and sometimes better to wait until the earnings come out.
Buy the fat.
And buy the fat,
Yep.
exactly, or sell the fat.
Or sell the fat.
Now, overall company returns. How has earnings season gone? Right, by the 27th of October, we had 600 companies report. 48% were winners on the day, 52% were losers. The average return was up 0.1%. And then as of when Sahil took this report yesterday, we had 1,400 companies report, 47% were winners, 53 losers, and the average return was a big fat zero.
Zero.
Now, looking ahead to earnings this week then, of course, it's all about that election. It's all about the Federal Reserve, but also watch out for your Qualcomm on Wednesday, especially with regards to Intel as well, because remember, Qualcomm said that they would wait until after the election to make a decision on potential investment or bid for some of Intel. AMC, CVS Health, and yeah, what else have we got? Cameco, of course, in the nuclear
Moderna.
Sector.
My favorite ticker of all time.
Which is?
mRNA.
Brilliant.
Also, we've got
isn't it?
DraftKings and Pinterest. Is that Pinterest on Thursday? Yeah. But just shout out to, is it Raj or Palantir? Because Palantir is currently up. Yeah, this morning. Palantir is currently up and just putting a shout out onto the chat as well. It is up 12.7%.
That's right. Excellent. So that is our review of the week. Thanks to Sahil. Just remember, be careful with your positions ahead of earnings. Be careful with your positions ahead of the election results tonight. Potential for high volatility and not always being caught on the right side of that volatility. So be disciplined in your risk taking.
I've cleared the decks. The only thing I've got on is the VIX. And with that, we'll come back after the short break.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced. then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back, everybody. So you saw just in that last advert there, Tom Sosnoff coming to a city near you next week. Monday, Edinburgh, Tuesday, Birmingham, Wednesday, Manchester. We've got London sold out on Thursday, and then Friday at Dublin. Now, Ireland are playing rugby at 8 p.m. and the show finishes at 7:30. So luckily, just enough time for you Irish rugby fans to get yourself to a pub after the show, the live show. So if you're still looking to sign up for tickets, go to tastylive.com events or go to Eventbrite. Sign yourself up. You need a ticket to get in, and they are going quick. London already sold out. We've got a few left for Edinburgh, and Birmingham, I think we've got about 10 tickets left.
Or you can just head there and say, I know Ange and Rich. No, do not do that. Do not be that person that has to queue up outside asking to be let in, because that has happened before. And don't try and rock up and do the sort of, you know, everyone will be trying to sign in. So please do not be that dude.
Right. What stage did I get to on my Trump media trade? So if we want to go onto the platform, you see what I'm looking for. Is there an interesting options trade where you have very little downside if Trump loses and this dive bombs? So I'm looking to buy a $20 put for $3.30. Okay, so that's one put paying $3.30 at the 20 euro level. Then I'm looking to sell some of the $9 puts for 70 cents. Now, if I do two of those, it means I pay $1.88. But if I do three of those, it means I'm paying $1.18 for that trade, which I'm trying to get to the bottom. Can we show the bottom there, possibly, gents? Bottom of the, this is the problem. There we go. So buying one of the $20 puts for $3.35, selling three of the $9 puts. Okay, so it's a 1x3. That means you receive $2.10 if we get it away at 70, and that would leave you paying 118 to get into a 1x3, which means that that would be $10 profit. So if Trump Media was still $4, if it was worth $4, if it was only down 90%, then you would make money on that trade if it dropped below 20 there. So quite a lot of interesting one. Is this binary? Is Trump Media worth 0 if he loses tonight?
Also, I'll be taking you through and showing you tomorrow as well what the outcome will be. But I've built Kamala and Trump lists. So if there's a Kamala win, I'm looking out for Leonard, Dr. Horton, Toll Brothers as well, because she'll be good for, she's already talked about housing. Also, renewable stocks of the likes of solar power, things like turbines, and also healthcare will be an up for her too. If we get a Trump win, I'm looking at crypto, I'm looking at geo, core civics, so those that build prisons and infrastructure of the like. Banks as well, looking likely to do well if we get a Trump win, as well as the obvious ones, which are the US oil majors, Chevron, ExxonMobil, and ConocoPhillips.
Now, a quick question, maybe somebody in the gallery can help us with this. Jay is asking, can we have a link to Monty's report? Can't find it on the dashboard or search. I'm wondering, can you get it in the Explore function? Is that available in the Explore function? Let's see if we can get an answer on that, Jay. We'll hopefully. And then Neil saying fireworks. Is that fireworks that you've just heard some outside, or fireworks in the all sessions? Why don't we take a look at those all sessions?
Oh, Palantir, one of the big fireworks, the top gainer on the all sessions. So good on you. Is it Raj?
Raj will be very happy.
Yeah, 12.11%. Wow, well done, Raj.
We're going to pop that up on screen, please, guys. Boeing up 2% on the back of that agreement for the workers to pick up their tools again. We've got Alphabet, Google up 50 basis points, American Airlines the same. Let's see who are the losers in today's session. And those, do we have any? There they are. Not really. Down 20 basis point, the biggest losers. And Plug, my goodness me. Plug Power, which was up, I think around, it was definitely double digit. I think it was up between 15 and 18% yesterday.
It's very volatile, that stock. Those of you looking at that, just buyer beware. It's very, very volatile. Call out to Andrew from Florida, or originally from Florida as well. Good call on the move on senior there. It has gained around, well, it was 1% earlier on, and it's now 0.5% potentially on that Boeing news. Also taking a look at across the FTSE universe, we've got Associated British Foods now up 4.2%. It was up higher earlier. However, the outlook for the sugars business weighed on it slightly. Severn Trent still up 3.6%. You'll be glad to know.
Oh. Why would I be glad to know that?
I thought you were long Severn.
No, we put an order in to try and get them at 15.
Oh.
What price is it now?
It's now 26.59.
Right, so yeah, so Severn Trent benefiting there on the JP Morgan and Citigroup double upgrade. But I was a dick for a tick, so completely missed out at the 26.15 level. Right.
He said it again. That's the third time today he said that D word.
Dick. That's my name. Dick short for Richard.
I know. Dick for tick. I was like, he said it again. Next up, 1.8% there for those of you that trade retail stocks, and also not a bad day for Vodafone, up 1.4%.
Good stuff. Right, what do we have coming up this afternoon then? We have the ISM services number. So an expectation of 53.8 for the ISM services. The employment number, very important to look at, right? It was 48.1 last time. Are we going to see further deterioration in the services employment number? And then look at that big, strong new orders number of 59.4 last month. Can we see prices extend and potentially give us concern around further inflationary concerns?
I'm so pleased that we've moved back to normal hours as well.
So am I.
Because it really messes up the kind of trading clock, internal clock, and I'm not like checking every few moments now. So it is back
And
to
that hour between 1:30 and 2:30 yesterday, I had
Yeah.
a nice little walk in the sunshine, let some brightness, enjoyed my Mexican lunch.
nice. Yes, but the ISM remind our viewers again, we're back to the normal time, right?
We're back to the normal time, yeah.
Okay, great. I'm still waking up at the wrong time, people. So it's really quiet out there on the US earnings front before the open as well. We've got like really small names. So not really worth mentioning. However, it is probably quite prescient and responsible to say that when we have high volatility events, US election being probably the biggest one, and who knows might happen in the next few hours, I don't know about Rich, but I've cleared the decks, and it's also important to know, like with earnings, with these sort of events, it's good to be extra cautious because who knows what might happen. It's anyone's call. Margins are so wafer thin.
That's it. So be very careful with your moves tonight. Take careful consideration. Maybe you're staying up all night. I remember I did in Costa Rica in a hostel, watching Trump in 2016. The S&P was down, limit down 5%. All right, so just remember, anything can happen today. Anything can happen. Be careful of your margin, be careful of your equity, be careful of your positioning. I personally have very, very little risk on, but I'm ready to act. I'm ready to swoop if I see opportunities, and let's hope, trader friends, that we get some of those opportunities this evening.
And let us know. Let us know, how you did when you patch on tomorrow, or give us some insight as to how you spent your evening.
Now, Ange, are we coming on early tomorrow? 6 a.m. start, do you think?
I'm happy to come on. I mean, it's exciting, isn't it? It's always exciting.
Fred, shall we start early tomorrow?
There's major revolt.
Well, I tell you what, tomorrow will be our first TikTok live. There you go. We hadn't planned this. I've just come up with the idea. Somebody's going to be angry at me, I'm sure. But TikTok live. We are now on live with IG on TikTok. We're going to be going live earlier than normal tomorrow. I'll say 7.
Are you going to tell me where you're going to put in your...
4-7, we will go live on, live with IG on TikTok. If you're on there, join us. You have to add as a follower, and we'll be on there preparing for the show. You'll see what the studio actually looks like, and we'll give you some early reports.
I'm looking like this because the last time you did something like this and didn't tell me, I was here putting my lenses in live. Was not a great look.
And you might even see producer Fred.
Ooh!
We'll treat you to the gallery because it's US election.
Very shy.
You'll see them all.
Very shy Frenchman.
Fantastic. Yeah. Best of luck today. I've been Rich McDonald. This has been the wonderful Angeline Ong.
And we will see you bright and early tomorrow.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, would you like to take a quick look at the market?
Sure.
Even the S&Ps were down last night when you were doing your live show, last call. Even the S&Ps are up 6 right now, but they've had a relatively tight range, 26 handles, top to bottom. We're sitting right in the middle of the range. NASDAQ up 5, Russell down $2.30, and the Dow down 25. Volatility down 30 cents to 2015, but over 20, as you can see here on /VX. Bonds up a full point and change. Sadnaf talked a little bit about them earlier today. That's a 1% move. I mean, I guess they're hovering around their lows, much closer than their recent highs over the last month, but they are up a full 0.04. Notes are doing the same, almost to the same degree, a little bit, half as much on the notes, but again, catching a little bit of a bid from the bottom. Bitcoin futures down $550 to 69. Remember, about a week ago, they were flirting with 74. Oil up almost $2 to 71.43. That's the high end of its range. You can see here they traded almost $1 lower, a little bit more than $1 lower to 70.25. Gold continues its rally up $4.70, although it has had a day or two of downticks, which is basically not allowed. Silver up 17 cents. That's a bigger move in silver on a relative basis. That's a 0.5 percentage point in silver. Net gas down small. Euros and currencies, as you spoke about just a moment ago, Sadnov, euro catching a bid here, up 0.0059. You can see here on the euro last couple of days catching a nice little bid. I don't know what the yen is doing. I haven't looked. What's the yen doing?
It's up big. It's up big.
Ooh, /6J. I would think the Sadnov's going to be in a much better mood today. We'll find out. But yes, the yen catching a little bit of a bid off its bottom too. We'll see if this holds. That's all I got.
Okay. So we got a bunch of emails over the weekend. I was busy answering stuff.
As we do every weekend.
As I do every weekend. I spent 3 hours yesterday morning in the coffee shop answering emails.
Oh, how nice. Have you had your first cup of coffee yet, Sadnov?
No, but I've drank a lot of iced tea.
So you own a coffee shop and you don't drink the product?
No.
And that's not good business. Not good business sense, not good business.
I drink the iced tea, and
it's not an iced tea store. It's a coffee store. It doesn't say bad tea.
It's an iced tea store too.
Coffee.
And I eat the toast.
You don't swallow though. You spit because your body's a temple.
We ran out of toast. Jimmy had to make a special trip to the city.
My bread's selling like hotcakes. Another business you'll be building on my back. I love it. I hope you say something on my tombstone someday.
Yeah, we had a special delivery. So
nice. Let me just tell you something. These delivery charges, they're going up.
They're already too expensive. But kids got to make a living, so it's all right.
Sure. All right, what do you got for us? Confirm and send.
Emails that came into us over the weekend. Let's do it. Can't believe it's November 4th.
New. Oh my God, you still have that sniffle.
No, not really.
You just forget it.
Let's see what we got here. With the election so up in the air, do you think it makes sense to close out of positions ahead of time and wait for results and then get back in?
Easier said than done. Looks great on paper a week later. You just got to tell me, this is like a trend. You got to tell me when the trend starts, when the trend ends. Very hard to decipher. So for me, this would be a really tough thing to do. I don't mind you lightening up positions going into the elections if that's what makes you feel better. And I don't mind you increasing your positions going into the elections if you have that kind of bias. So for me, it would be very hard to pick and choose when to get in, when to get out.
Yeah, it's always hard to pick and choose. So I decided to write about this last night in the Cherry Bomb.
Yeah,
and
yes, you did.
I focused on if you don't get the cherry bomb, please sign up for it, and we can send it. I mean, I basically laid out 3 scenarios, and hopefully I don't mess it up when I'm explaining it now, but I laid out 3 scenarios. The first scenario is that you reduce the size of your positions. It doesn't mean you get out of everything. It just means you reduce the size of your positions and put it down to a very, a much smaller than whatever you have on now. Like maybe it's a third, maybe it's a half, maybe it's 2/3, and you put some cash on the side, you have some dry powder, and you wait for an opportunity created by the elections after Tuesday night, and then you reload on Wednesday or Thursday. That's what I call the most conservative approach, is take some money off the table, or take some positions off the table and free up some cash. The second, which I consider the moderate approach, is that you take some of the risk off. So you don't take as many of the positions off, but you tie up some of the risk. Like if you have some naked options or stock, you sell some calls against it. If you have some undefined risk trades, maybe you buy in some wings. Whatever it is, you reduce your risk. So you're not reducing the size of your positions, but you are reducing your risk. You're not necessarily freeing up a lot of cash, but you are taking a lot of the delta risk off. You are neutralizing it. Maybe you're widening out the strikes, buying the guts, selling the wings, whatever it is. But you're basically reducing your delta exposure, lowering your theta, reducing your delta exposure. That is the moderate view. So that's the conservative and the moderate. And then what I call the aggressive approach is that you go pure contrarian. And whatever has been down big prior to the election, you go all in on the other way. So it's essentially a little bit of what I'm doing for this election. Things that are beaten up like bonds, I'm buying them. Things that are overbought, which I think are like overbought, like the US dollar, I'm selling it. Things that I think are overbought, like the NASDAQ and the S&Ps, I'm selling it. Things that I think are oversold, like the Russell, I'm buying it. So I am definitely taking a contrarian approach. I'm reducing a few positions that I don't really like, but for the most part, I'm keeping most of my risk on, but I'm going all in what I consider on asymmetric opportunity. Now we're getting paid a little bit this morning, so that's a good thing, but we'll see what happens. That's my approach to that. Let's go next slide.
Very good.
I was
think
watching
you made some good points there.
Yeah, I thought it was just the time to write about it last night. That's all.
Yep.
I was watching Tasty Live Friday morning before the market measure segment, and you and Tony were discussing SMCI. Talked actually a little bit about that with Vanetta this morning. The IB rank was listed at 104. I'm wondering how it's calculated to be 104, since I thought IBR was supposed to be from 0 to 100.
And you thought correctly. It is 0 from 100, but intraday, there's no fence on that 0, and there's no fence on that 100. Meaning, like today, or last night, you had SMCI with an IB rank of 109, which means that the implied volatility has never been higher. If we kept it at 100, even though volatility was going higher intraday, you keep that IB rank number at 100, you actually wouldn't know that volatility was higher right now than it was an hour ago. So we keep no fences intraday on the IB rank, but at the end of the day, we set it. So if SMCI opens this morning with lower implied volatility than 109, you will see it under 100. And if it opens higher than its most recent volatility, you'll see it over 100.
Yeah, I mean, we fence it in overnight and we show the actual real number during the day. So you can see, give it some context to what extent, it is sometimes that has an impact. I've definitely sold some premium in underlyings where it got up to 110, 120, 130 even intraday. And, it's actually worked out quite nicely. So, yeah, I mean, we just think that's kind of the best way to show it.
Very great.
Let's go next slide. Will you scalp on Tuesday ahead of the election? I'm worried about not being able to get out of a position before the close and then being stuck overnight.
I mean, I think you will scalp if we have some decent sized moves. I mean, you can never tell what the market's going to present to you. I don't think you have to worry too much about getting out on futures one way or the other. You might not like the prices that they're trading at. So I will tell you, trade small. Futures are a very leveraged product. I mean, one large future in ES is 500 shares of SPY. That's usually larger than most notional value that people trade. But we got so many micro and mini products now that I think it opens the world up to just about anybody who wants to bet on a 50-50 shot.
First of all, I think Tuesday is going to be kind of dead, and you're absolutely going to be able to scalp all you want on Tuesday. I mean, you know, everybody's going to be playing. Everybody's going to be in the pool. There's going to be
the world is going to be looking.
Yeah, I mean, everything's going to be the pool's going to be packed. The bus is going to be packed. So you can do whatever the hell you want to do on Tuesday. The stuff might get crazy on Wednesday or Tuesday night in the middle of the night or something, or Wednesday or Thursday. But Tuesday, nah, man, we're going to be sitting here, you know, watching Tony, you know. I don't know. What are we going to do? Oh, watching Tony. It's Taco Tuesday. Tony's going to be making his own taco. He's going to be complaining. You know, I mean, there's not going to be a hell of a lot to do Tuesday during the day. You're going to be able
Tony's not going to aggravate himself with Taco Tuesday. If it's Taco Tuesday, Tony's going out for lunch.
Well, you're going to be able to do whatever you want to do right up until the close. You're not going to get stuck with any positions on Tuesday. No, don't even worry about it.
Agreed.
Let's go next slide. Is there a way on the platform to track just the price of an option over time on a chart? I know where I got into a position, but I'm curious the range at which it has traded since.
Just the price of an option. I believe so. Let me go check right now. I'm sorry I didn't know about this question ahead of time. Let's see.
All you have to do, Tony, is just right click on any option.
Right click on any option. I just clicked on an SPY option. I think I could put it up here for you right now. Let me take a look. I certainly can. There you go. I just right clicked here. I'll do it again for you. Just right click on any one of these options. I'll right click on the 573 calls. I just picked them and it says view option in chart. You click on that and whatever your time frame is, you'll have that option charted out for you. So yeah, you most certainly can.
Yeah, I mean,
as you can see, I don't use the feature.
We have a lot of we have actually a lot of information on the platform, and
you can always go to the help center and just type in, you know, can I chart an option?
Yeah.
And it'll give you, and you do that on the Tasty Trade website, the brokerage firm.
Yeah, but we have the simplest thing to say is just right click on anything. You can see it on chart. That's the simplest. Right click on any option. You can see it on the chart. That's the easiest way.
Yep.
Let's go to the next slide. I have a trade idea and I want your thoughts. I would sell a strangle in ES, and then if my call is tested, I'll buy an ES future. If the put is tested, I would sell an ES future. I know I could get whipsawed, but if I do this, at least I'll keep all my premium from the strangle. What do you think?
I mean, look, I don't hate the idea, but if you're going to get very heavy on the future side. So let's just think about the trade. You're selling a strangle. That means you don't want anything to happen. You want it to stay inside. And when it goes higher, you're buying a future. And when it goes lower, you're selling a future. I think it goes counter to my thinking, but I don't have a problem with what you're doing. It's logical, and it's okay if you get an extended move. We haven't had any to the downside. We have had it to the upside. So I think if you get your first move to the upside, it'll be the right play.
So I know that on paper, it sounds like, on paper, it sounds
magical.
On paper, it sounds a little magical. If my call gets tested, I'll buy an ES future. If my put gets tested, I'll sell an ES future. In reality, Godspeed. You couldn't pull this off in a million years. It's not how the world works. You would be buying the top and selling the bottom way too many times, and you wouldn't know how to unwind this successfully. I would say you are way better off adjusting and rolling up the untested side or recentering the trade than trying to trade futures against ES strangles. And remember, a strangle is only going to be half the delta of the future. So like if your call gets tested, it's only going to be like a 50 delta. So the future is going to be.
But you can use micros and minis if
you can
want
use micros. You can use 5 micros instead of an ES, but of course. But
or 2 micros or 1 micro.
My point here is that you're going.
We're on the same page.
Yeah, this is not a strategy that will work. Just don't try it. You're gonna pull your hair out.
I hate to say something not gonna work, but
yeah, I know. This is just a really hard strategy to execute.
Yep.
Let's go to the next slide.
Last one.
Do you think there are different sectors and different companies that will be more interesting to trade depending on who wins the election? And if so, how do you see that shaking out?
This is another one. This is like terrestrial TV and regular old news. This is sound bites. I mean, yeah, maybe you'll get a Tesla play. Yeah, maybe you'll get some oil related moves. I don't think there's anything that you can do with any of these sectors, but I would watch implied volatility. You're going to get some spikes in implied volatility. They're going to be very interesting for strategic trades, meaning strategies, as opposed to direction on sectors.
You know, I do think I think the market will react in a way that there's definitely going to be certain sectors that are going to prefer certain candidates. And there's no question about that. But what we've learned over the years is that generally speaking, okay, and again, it is very hard to interpret exactly how the market, like what the market has already done in anticipation of that. Like there are some people that are going to say, well, if Trump wins, sector A, sector B, and sector C are all going to go higher. But what they don't say when they tell you that is, has sector A, B, and C already gone up a lot in anticipation of that?
Sure. Right.
And that's the hard part. And with respect to the market, I just don't think that like my bet is whoever wins, market's going down. And maybe that's going to be completely wrong, but I like wherever I think there's the greatest velocity. With respect to sectors, your guess is as good as mine. Like a lot of people think, well, I mean, I'm not going to get into actually, let me back up for a second. I'm not going to get into specific, predictions about different sectors. I think if you have a hunch and you like your assumption, then you should definitely play it, because you're going to be more mad at yourself if you don't play it afterwards. But don't do anything crazy. Like, the one thing I've learned over the years is whether you trade something really big or you trade something really small, the impact of that win is virtually the same regardless of the dollars.
That's true.
I mean,
That's true.
Like I'll just give a kind of a crazy example. If I bet with Tony on a football game and I bet $20 with him and I win, I feel really good. If I bet $500 with him on the same thing, I feel the exact same way. Like I don't feel any better. It's like, and so what I've learned is that when it comes to trading, it's kind of similar. I want to participate in things that I have strong assumptions on, but I don't have to mortgage the house, or I don't have to, bet too much because it's not going to change my life. So if there's a sector that you really like and there's a candidate that you think is going to win, then sure, take your shot. But I wouldn't do anything like, again, I wouldn't bet the kids' futures on it. Let's put it that way.
And let's take a quick 90-second break and come back. We've got an option jive with Kai next. Even the S&Ps are up 2, but the NASDAQ just sold off. It's down 23. We'll be back in 90 seconds with Tasty Live.
It's option. Jive.
Tomas, we are back, my friend, and that's right. It's time for an option jive with this man, Kai, in the house. Hey, Kai.
Hey, Kai.
How are you doing?
Good.
Doing wonderful. Thank you so much for coming on the show.
Glad to be here every Monday morning.
Even the S&Ps are unchanged, so try to be a little bit more interesting than that. Let's go.
Oh, yeah, very interesting. Everything is going to be unchanged.
Good, good.
All right, so let's take a look at what happened last week for... Ready for the slides? So 4 indices, S&P, NASDAQ, Russell, Dow Jones. Last week, we had more downside movement for S&P and NASDAQ, especially NASDAQ. So the major contributors are the earnings, because we have pretty much 5 out of 7, kind of magnificent 7, had earnings, and which pushed the overall index move around, especially NASDAQ. So Russell and Dow, 0% pretty much, and NASDAQ's a negative 1.6. So let's take a look at the long-term NASDAQ weekly performance. If a 1.6% is what kind of level is that? So if we go to the next slide, we're going to see in the past 20 years, NASDAQ actually has much bigger movement, either average upside move or negative move than the SPX. SPX 1.6, 1.7, very close to other indices, but the NASDAQ average about 2.5% up or down. So yeah, 1.6% is larger, but is actually within the is actually smaller than average.
That's pretty interesting. Yeah, I like that.
It is kind of interesting. Yeah, I agree with you.
Yeah. So, and the next one, we're going to take a look at the expected move. Not expected, looking back 45 days ago. If we put on a 1 standard deviation strangle, how the strangle would perform, SPX, all the 4 indices are very close. We're trading slightly above the original price, but still well within the expected movement. So if you trade 45 days strangle in the past couple of weeks, pretty much the results is going to be very good.
Okay.
Impressive.
Right. So,
yep.
So next one, the major sectors, IVR, S&P. Most of these sectors last week we saw increasing IVR. S&P 500 or other indices, bonds increased significantly from 55% almost 100%. We saw 100% last week. And gold increased, euro or other or dollar, most of their IVR stay the same. And the only one drop is the crude oil. I think the price went up a little bit last week, rallied a little bit. That's the main reason. But you guys probably understand better, probably because of the election, all the earnings, so it drives up all the major sectors IVR.
Yeah, we've looked at volatility and we've talked about IV rank is high, /VX is in 20 handle. I mean, it was in the teens prior to this. So yeah, we've noticed volatility has come up across the board. I'm a little bit surprised that oil, with oil being a little bit higher, I think it's going to catch a little bit of a bid on volatility today as it goes higher. So we'll see. I think that's more of a fact over the last, it's come down from around 76 down to, in the high 60s. Now it's starting to come back. I think volatility come back.
You cannot complain about 50% IVR. Still great trading opportunity if you want
100%.
to.
No, 100%. No complaints whatsoever.
Yeah. Okay, so all the data and for Monday's research corner are from the end of Saturday or the end of Friday. So I didn't include the beginning of Monday. So just for information. And next slides, I'm going to add a little bit more information for 0 DTs. So these are the 5 days 0 DT expected versus realized. So we record the expected move at the before market opens on every day, and we look at how much what's the movement for that day for SPX. So 5 days, we have 2 down days and 3 up days. And pretty much 4 out of 5 days, the realized move is actually stayed inside the expected move. Only Thursday, we saw almost 2% downside movement for SPX. So if you're a 0 DT player last week, you probably have every day, you probably have 80% success rate.
Sudden, what do you think of that?
Well, that's not really fair because that's just where they ended up at the end of the day, which is easier said than done. Sometimes, sometimes in the middle of the day, there's, it gets a little brutal, but yeah, I mean, it is interesting to see how often they do close inside of whatever the expected move is. That's interesting.
Yeah, I'll just keep
and a lot of that move. Oh, I'm sorry to interrupt you, Kai. You got a lot of movement, like in the first half an hour of the day. So if you place these intraday, I get the emails from people who are having decent success with diagonal trades on the 0-day, buying 4-day weekly options, that kind of thing. So
diagonal. Because the last week and that last 2 weeks, the implied volatility increases, right?
Yep.
Yeah, I didn't play these. But I just try to provide more information where the SPX started at the beginning of the day and where it ends at the aftermarket close. Okay, next, some major movements. What caught my eye is actually the Bitcoin. So last week, the Bitcoin futures price actually reached the historical high, 74,000 plus. It came down to 69,000 right now, but there are multiple days we actually reaching the all-time highs last week. So it's something that's kind of interesting to mention.
Yeah.
Agreed. Interesting to mention.
All right. So some extra information for BTCs, things to talk about it. Again, the long-term average weekly movement for Bitcoin is much larger than any indices, major indices. So here I put the comparison against the SPX. So can we go to the next slide? The BTC average move is 1.4% to the upside. So if we only look at the positive and negative move, the weekly movement is 70.6 and negative 5.7%. So definitely a very volatile assets. So anyone want to play that? These are kind of the long-term average for past 6 years.
So I don't know what you think of that.
Yeah, so
I mean, it doesn't surprise me that the positive moves have been, the upside doesn't surprise me. Let's put it that way.
Yeah, it's pretty big. And if you want to place Bitcoin as part of portfolio, how does that look? The correlation against SPX over the long term. So next one, we show the long-term rolling correlation against SPX. So next slide, we can see pretty much it stays on the long-term average positive 0.27. So it's kind of a medium to weak positive correlation against SPY. So still, most of the time, it moves the same direction as the SPY.
Yeah, I mean, most investable assets are going to have, not necessarily a high correlation, but they're going to have a positive correlation.
Right. So it's probably not going to fall into the perfect diversification tool if you want to invest Bitcoin against whatever your portfolio.
Right.
It's still going to be positive correlated. All right. So last, we're going to look at the earnings. So first, let's review what happened last week. Last week, the movement actually pretty big. Even for Microsoft, I believe it's 7 plus whatever percentage, which is huge. For double-digit movement, 3 stocks are Coinbase, Roku, and Pton, P-T-O-N.
Mm-hmm.
So it's a negative 15, 70%, and it's a positive 28%. So these are the largest move from last week. If there anything interesting you want to add it.
No, we didn't have too much success. We didn't have too much failure either for the earnings. We played them kind of small.
Last week, yeah, I think, hang on, I got to remember. I think our biggest winner was Intel, maybe.
I think you're right on an up move. Pure directional.
Intel worked, Meta worked small, Apple worked. Yeah, last week was okay, actually, for a change.
Okay, not bad. So what's your impression about the is there more number of stocks going up or more number of stocks is going down? How do you feel that?
It feels like they've been a little weak, but I can't tell you for sure.
Okay, so next slide, we're going to see the across the board. So at the end of Friday, we have more than 1,400 companies already announced the earnings, and you're right. So there are slightly more number of companies has weaker, not earnings, but weaker stock performance after the earnings announcement. So now loser increased 1% overall, but still very close, 47 versus 53. And the average return now, exact like that at 0%.
Yeah, it's crazy.
This is not only last week. This is the
I know.
average.
It's crazy.
Yeah.
Average
so the
return
more numbers
0.
we see, the closer we're going to get a 50-50 and 0. All right. So last slides, we're going to see what's going on this week. We still have a lot of interesting company coming up. Monday, today after close, we have PLTR, Cliff Swing. What the other major ones? Probably major ones are ARM, Qualcomm. Thursday we have Pinterest, Airbnb.
Looking at this list, I mean, obviously today, Palantir is definitely something that's tradable. I think Wynn's a little thin. Cliffs, I haven't traded. Cleveland Cliffs, I don't think we've traded in a while, but it is tradable. I think tomorrow, election time, SMCI. I mean, who does your earnings on election day?
You would think they'd look into it.
It's just weird to me. We have a small position on SMCI. On Wednesday, it's a little more interesting. I think, ARM is tradable. For some people, Qualcomm is tradable. That's about it. And then on Thursday, Moderna, DraftKings for sure. We have a small position on in Rivian, Airbnb. What is that? No, that's Pinterest. Yeah. I'm not sure. I think we have a position on in Moderna, and DraftKings and Rivian. Sometimes we trade Unity, Affirm, and Pinterest, but nothing right now.
Cool.
Awesome.
Cool. This is not a complete list, but it's a most liquid one based on Tasty Trade standard.
Yeah, that's what we like to look at, Kai. Good job, man. A lot of information there. We're going to take a quick 90-second break and come back. Even the S&P just sold off 7 handles. We'll be back in 90 seconds. Let's take the live opening bell next. Tomas, we are back, my friend. You know what that means? Time for a little bit more Take the Live. But this man, nothing says Monday like Dr. Jim, the skinny on options, abstract applications. How are you, Dr. Jim?
Man, I'm well, gentlemen. Man, here we are. I am live. I'm live with Tom Sossoff and Tony Batista on the Tasty Network. It's unbelievable. If there ever was a true real-life luckbox that you guys know personally, it's got to be me, Tom. I mean, what do you think? Is anybody luckier than me right now?
I'm not
what do you
sure,
mean, Dr. Jim.
I'm not sure where you're going with this, but give it to me.
No, I'm not going anywhere with anything. I'm just thinking about my lot in life, man. Since tomorrow is going to be the apocalypse and it's all coming to an end, I'm like, man, I'm just thinking about things, and I'm like, I really lucked out, man. I really, really lucked out.
I don't want the world to come to an end, because you still owe me $23, and I want to get that because I'm putting that up in a frame. So the world cannot end until I get my $23 from you.
Hey, man, did you see my Dolphins yesterday, though? I mean, my Super Bowl hopes, they're looking good. They're looking strong. So I may give you 23 now, but you're going to give me 22-1 at the end of the season, and that's going to be that.
Tua played good.
The Dolphins lost. Wait a minute. Time out. The Dolphins lost yesterday.
They did.
Yeah, they're terrible, man. They're awful.
No, Tua played good.
Yeah, but Tom, come on, man. We're not giving out participation trophies. Like, are you part of that movement now? You gotta win ball games, man.
I have always been a participant. I mean, how do you think both you guys got hired? It's all participation.
Oh my God! You threw me
you
in there.
are you.
I cannot believe
You're
you
the
just-
definition of
I
a
cannot
participation
believe you
trophy.
Just did that. I cannot believe you just did that. That is
You're
so freaking
both
cold.
You're both walking proof that participation trophies work.
You're unbelievable. All you gotta do is show. They say 90% of a job is showing up. Yeah, right.
That's right. That's right. And Tony, well, they say 87% of success is just showing up. The
Yep.
other 13% is staying till the end. So there you go.
Unbelievable, Sadnoff. You are amazing.
You're the poster children you know,
For participation awards. God, I love you, man.
for participation awards.
So speaking of participation awards, hey, how did your line dancing go on Saturday morning during your talk? How did that work out for you?
Went pretty good.
I saw Katie. Katie did an amazing job with her instructional.
I
ability.
didn't know that Katie was like a professional line dancer. I go, where did you learn this stuff? She goes, I went to school at Illinois. And I go, I know, big deal. It's like, it's not like, I mean, Illinois is in Champaign-Urbana. It's in the cornfields, but I don't think they did line dancing there.
Evidently they do.
Yeah,
Katie's,
her Saturday was great though.
Saturday was great, but Katie it's funny. She is a little bit of a, at heart, like she's the one that dragged those guys to the rodeo. There's a little bit of like a Southern, like, I mean, let's face it. She grew up on the South side of Chicago. Okay. So she doesn't have a lot of like the South in her, and she's an Irish kid from the South side of Chicago, but she acts like she's, I think she thinks she's from Texas.
She might be. You never know.
She got a little Memphis, Tennessee in her, maybe.
She got something like that. Yeah.
Yeah. Okay. All right. Fair enough.
She
I heard Saturday was.
She definitely likes that stuff. Yeah. No, Saturday was
Saturday
great.
was
People
great.
were awesome. Everybody was amazing, and it was all
The brisket was also amazing, right?
cool. Oh my God! Well, you've been to Pecan Lodge with me before.
Oh man, is that where you went? I assume that's where you went. You didn't mention it this morning in the Cherry Bomb, but I assume that was
I
it.
did. I said pound hot mess, which is their big giant sweet potato.
Yeah.
But well, actually, I had to go to a wedding on Friday night in Chicago, so I was a little bit. I had to fly out first thing in the morning, so I got there, plenty of time. But I didn't make dinner the night before, but I made lunch that day.
You didn't make lunch. You mean you made it to lunch?
I made it to lunch with Pete and somebody else, and I made it to the Pecan Lodge, and I was very happy. And we stuffed ourselves in a very short period of time.
Man, I gotta tell you, the Pecan Lodge for lunch is a power move because that's a dinner play, man. That's a dinner play because that's gonna bury you for the rest of the day.
Oh,
so the fact that you rolled up
buried
at 2
me.
p.m.
Buried me. I was good until the following morning, but then I had to go. I had a brunch to attend yesterday.
Okay.
Uh-huh.
All right.
You had a brunch too? Wow.
With my people.
Oh, of course. Of course. Your people.
Well, speaking of our people, you guys want to do some finance? I got a fun little segment ready for us.
Sure.
So in honor of the unspecial tomorrow night, right? That starts at what, 5 o'clock Central? 6 o'clock Central?
6 o'clock Central.
6 o'clock Central, 7 o'clock Eastern time for my Florida peeps that might be watching. We've got the unspecial tomorrow night. So I'm curious, gentlemen, what is the delta? What is the delta that we know the winner of the election tomorrow night?
100 delta.
100 delta that we know the winner tomorrow night?
100 delta.
Wow. Hold on.
It won't be certified and verified tomorrow night. You'll have the winner tomorrow night, 100 delta.
That okay,
we're gonna announce the winner.
I'll put any amount of money on it, by the way,
yeah,
too.
well, it's about to happen right now because you're selling dollars for like 10 cents on the dollar right now. So
Okay.
5 cents on the dollar. So wait a minute. There is no chance that we know the winner tomorrow night. It's impossible.
First, two things, Jim. I don't want to interrupt you, but I can't stand this argument because you're so public. A, we are announcing at the end of our unspecial the winner of the election at 8 o'clock. So that'll be
That
official.
doesn't mean anything. That doesn't mean anything.
It means
People
a lot.
No, stop. I gotta stop you. Hold on. There's so much. I can't do it anymore, man. This could be the end for me, but I can't do it anymore. Friday from theory to practice. People should go back and watch the show. You said, and I quote, last year, 2020, it was quiet as a mouse, quote unquote. And you couldn't be more wrong. The following morning, the NASDAQ gapped up like 3%. And all throughout the day, it was crazy. So if you're going to actually speak truth into what's happening in reality, we will not have a winner. You can say whatever you want in the world of Tom Sosnoff. It's Kamala, it's Trump. You do whatever you want. But it's not going to be true.
There will be a winner. It won't be certified for a couple of days or whatever, but they'll be announced a winner. And the winner will probably be announced before midnight.
All right, so that's not true. And everybody who's watching obviously knows that's not true.
Okay.
I can't bet you, though.
I cannot stand.
I can't bet you, though, because you're throwing out these vague terms like, certification, and all that stuff matters, of course. But in terms of like the actual winner,
There'll be a winner announced tomorrow night. Yes, 100%.
no chance. Absolutely no chance.
I don't even know why you guys are thinking it. Even Trump came out yesterday.
Tony, can you please help me here? I know that you know what's going on in the world around us. Tony, please help me.
Hey. Even Trump came out yesterday and said there'll be a winner tomorrow night.
I don't give a rip about what Trump says.
I know. I'm just telling you that everybody knows there'll be a winner tomorrow night. It's over. Okay? Stop thinking this thing's going to go on. Election integrity. It'll be tomorrow night.
Impossible.
Oh, my God. I can't
Tony,
stand it.
help me out here.
It will not be tomorrow night, but we're going to announce one. We're going to announce one anyway.
Stop. That's all I needed. Thank you. That's all I needed. Thank
we're
you.
Going to announce one.
So, well, that doesn't matter. I mean, he's going to say whatever he wants. Who cares? But now I can go to sleep tonight and tomorrow night knowing that at least there's some beacon of truth on the unspecial tonight, and it's not just Tom Sosnoff rolling solo. And it's just, oh my gosh, man, unbelievable. Anyway, let's talk about some finance because, man, you're getting me really something. But this is going to finally be the year that Illinois turns red. So I hope you're ready for it. All right, unstandard variables. Are you guys ready to go?
Sure.
All right, let's do it. So this is in honor, of course, of the unspecial tomorrow night. A core piece to a large chunk of our statistical analysis in the markets is centered around the normal distribution. And an integral part of the normal distribution is something that is referred to as a standard normal variable. But today we're going to see that the theoretical standard normal falls short in making the leap from theory to practice in 3 important ways, which of course you can watch only on the Tasty Network every day at 2 o'clock Eastern. So gentlemen, are you ready to make this leap from theory to practice so that maybe we can help out your trading this morning, Tom? Are you ready?
Sure. Let's do it.
Okay, so let's look at standard normals. John, hit us here on the next slide. So standard normal variables, this is a key piece of most statistical analysis that's centered around any type of distribution, like a normal, like a leptokurtic, like a chi-squared. I mean, there's so many different distributions out there, but standard normals is a very common thing that's used in the analysis portion of trying to evaluate those distributions and trying to learn more about their properties, their characteristics, etc. Well, what's interesting about standard normal variables, though, is they have a few characteristics that they don't pass the sniff test, man, when it comes to what we actually face in the financial markets. Number one, a random standard normal variable always assumes that the mean of whatever variable you're looking at is 0. All right, keep that in mind. Number two, a standard normal variable always assumes that the volatility of whatever metric you're looking at is standardized and constant at 1. Okay, keep that in mind. And then lastly, using standard normal variables allows us to standardize variables that makes it easier to compare and contrast, one to the next, which is obviously going to be a very good thing to allow us to do these, comparisons and contrasting, studies and analysis. This whole process, by the way, is very important in something like a Z-score. We've talked about Z-scores before, Tom. I'm sure you brushed up on your Z-score analysis this very morning. So Z-scores, Tom, do you remember how we use Z-scores?
How we use them? No, I remember the conversation. I don't remember specifically. No.
Come on, Sosnoff. It's a statistical measure that quantifies the distance between a data point and the mean of the data set. You got to pay attention.
Look at this guy. He's ready for the unspecial, man. He is ready.
It's
like, you don't
expressed in
stand
terms
a
of
chance,
standard
Sosnoff.
deviation, Sosnoff. Come on, for
Oh,
crying
my
out
God.
loud. Jesus. Get a mitt, get a ball, get a bat, get in the
What do you have?
game.
You have a chat GPT in your ear or something?
I don't know, but man, he's got something. That was well done. That was very well done. Yes, Tom Sosnoff, have you ever used an expected move before?
Sure.
Okay. All right.
What do you
Couple
got,
times?
Gene
Well, there you
Fama
go.
on speed dial there? Like, what's going on?
Eugene Fama's your boy.
Wake the F up. Jeez.
Didn't you try to get him on the show?
I did.
Isn't he the one you tried to get on the show?
I did, but I failed.
Did you ever actually get him on the phone, or was it just he never called you back or whatever?
No, he actually emails us all the time, declining. We've tried. We have kind of a funny little thing going back. How old's Gene Fama? Tony, just Google it for a second. We have a funny
He's gotta
thing.
be in his 80s.
Oh
right?
yeah, I would say maybe 90. I don't know.
Okay.
But he's still at University of Chicago. How old is he?
85.
85.
Okay.
And what we do is every year since we started Tasty, we email him and say we would love to have you on the show. And it's kind of like a running joke. And he every year politely declines with a smiley face.
Oh, that's great. But at least he writes back. That's pretty cool.
Yeah,
You know?
he's written back every single time and he declines.
Because I mean, you're just Tom Sosnoff. I mean, you're talking about Eugene Fama, man. Like the fact that he reads your emails is pretty incredible.
I actually don't know if I've ever seen him make an appearance anywhere. You know what I'm saying? I don't.
Yeah.
I mean, it's probably been 20 years since I've seen him do an interview or something like that. I just thought it would be really fun to have him on Tasty, and he's declined for 14 straight years.
That is pretty funny. That is pretty good. Okay, so all right, so Z-scores, expected moves, like that's a big part of what we do. All right, so let's now start talking about how these standard normals fall short and how we can use this information to maybe improve our trading. All right, John, hit us on the next slide. So number one, the mean in the financial markets is not zero. It's very clearly not zero. And we know this from looking at the model we see here on the slide, which of course is the geometric Brownian motion model that we've looked at before on this very show. I know Julia's looked at this before. I know Jacob's looked at this before. So, we've seen this from a few different angles. Well, the positive drift that's in the marketplace, that is essentially going to represent some form of non-zero positive mean in the marketplace over time. So right away, you see, all right, in a vacuum, in an ivory tower, in some academic study, maybe we can get away with a zero mean. But once you start to get into the actual arena, it's like, no, you have to start factoring in a positive mean because that is where the market is headed. That is the natural trajectory of the market over time. So number one, we have a non-zero mean, and it is a positive drift that, of course, can be represented by, I know, Tom, you and I have kind of slung mud at each other here. Is it a UST bill? Is it the positive risk premium? It doesn't matter. For this context, the main point is that it is some positive number. Next slide, John. So the next slide. So we've seen this before, too. But the volatility in the marketplace is not equal to 1, or it's, 1 is a bit of an arbitrary number. It's not a constant. It's not any constant number. Right? If you look at the two graphs, I mean, on the left-hand side, you would have constant volatility. Of course, we remember that would be homoscedasticity. On the right-hand side, we have changing volatility. In this case, we have increasing volatility. That would be heteroscedasticity. And so when we think about what we do, what we hang our hats on at Tasty, it's changing volatility. It's selling premium when IVR is elevated, kind of positioning ourselves for the volatility mean reversion that is probabilistically more likely to happen as volatility goes lower. That's it. That's what we do in like one sentence, right? That's the basis of what we do every single day. And Tom, don't you ever forget, man, just to make sure, again, since it's all going to be over tomorrow, don't you ever forget. Liz and Jenny may have brought you zebras. They may have brought you jade lizards, right? Mike, Nick, and Katie, they may have brought you a crab strategy. But don't you ever forget, not only have I given you Gimmies and Gotchas, the gift that keeps on giving, but I'm also the one who brought heteroskedasticity to your doorstep, my friend. So you're welcome.
He's got a good point, Sadnov. He's got a
He
good
has
point.
he has a great point.
There you go. Okay, so we have non-constant volatility, so we have a heteroscedastic market. So you can see the standard normal starting to kind of fall apart when it comes to the application to reality. But the coup de grace this morning, the last one, I think may be the most important. So John, hit us on the final slide. When you start thinking about, distributions and even normal distributions, they come in a lot of different shapes and sizes. So if you look at the different normal distributions here that are on this graphic, in the aqua, the light blue color, that's kind of a standard normal distribution. Like it's very uniform. Like there's nothing weird happening with the tails. There's no skew. There's no shifting. It's very, very standard, plain vanilla Betty Crocker. This is your academic standard normal distribution. Okay. But what happens when you get into the marketplace? All of a sudden, you're faced with distributions that might be leptokurtic, which we've talked about on this very show. That would be the pink curve that you see here on the slide. Or maybe you run into a distribution that has a positive mean, like we just talked about. That would be the green curve that you see here on this slide. Maybe you run into something with a negative mean. That certainly happens from time to time, especially if you're dealing with, not equity markets per se, but other markets. Maybe a bond market, maybe a commodity market. And so now you have a very different world that you're up against. And then lastly, what if you have high volatility? Like if you look at that purple curve, that's so flat, right? What's really interesting about this, have you guys ever heard the phrase, when volatility gets super high, every option acts like an at the money option? Have you guys ever heard that before?
Sure, of course.
Yeah. Did you guys coin that phrase? I don't think so. It's a little
Probably.
It's a bit too sophisticated for a Sosnoffism.
Probably.
We gave that one away. We allowed somebody else to use it.
Okay. So you sold that story to somebody else?
Probably.
Okay. Nice. Okay. Very nice. Well, this graphic actually captures the meaning, the essence of that line in visual form. Because when you have super high volatility, the distribution gets super flat because, all the data points are going to be so scattered. There is no concentration around the center. There is no modal point that just kind of stands out amongst the rest. I mean, everything is going to kind of trade like an at-the-money option because you just don't know where the market's going to go, right? Because as evidenced by the high volatility. And so in what we do every single day, gentlemen, we've got to be ready for all of these. Tom, are you ready for a leptokurtic distribution? Are you ready for a high volatility market where it's super flat? You are, because you watch the Tasty Network.
You're 100% correct, Dr. Jim. 100%.
I mean, I don't know what more I can do, man. I knew this was going to be my last show, my final show before tomorrow. So I was like, let's do it. Let's do it right. You did
it right. You did it right. Just remember, just remember, Dr. Jim, this gentleman here, I'm talking about Tom Sadnoff, my peeps remind me of the same guy that said that Trump would drop out knowing he couldn't win and Nikki Haley would be the Republican candidate. So that was just a summer ago. So don't worry about it, Dr. Jim.
I'm going to watch tomorrow. I mean, of course, I would never miss it. I'm going to record it and probably watch it several times. I can't wait, man. I can't wait. I can't wait to just hear what comes out of Tom's mouth. It's going to be unbelievable. And I know that the production team is going to be at the ready for clips and promos and all kinds of stuff. It's going to be some good stuff, man.
I think you should tune in because you're going to be challenged not by your standard normal leptokurtic positive mean high volatility questions, but you're going to get some constitutional questions tomorrow night that are going to challenge you. In fact, you might want to tune in to see if you can stump the Vecchio.
That's right. Stump the Vec. That's right.
Stump the Vec. Oh, that's going to be tough. That's going to be tough.
I mean, we're calling it Vex the Vecchio.
Vex
no, there you go. Right. That's nicely done.
You might want to tune in for the Tasty Squares game. We're playing our own little version of Hollywood Squares. Circle gets the square.
Stodnoff is dying to say circle gets the square. I don't know why, but he gets all puppy chested when he says circle gets the square. Oh, you should see him practicing. It's so fun.
My whole life's been about circle gets the square. Yes. But
for the block.
Hey, John, Do you have the sign up sheet for the electoral votes?
Yes, hold on.
So look at this, Jim. You can even participate.
Okay.
You can't
I'm
win.
ready.
You technically cannot win.
I can't win because I'm part of the network?
You can't win because you're part of the network, and you can't win just because you couldn't win even if you weren't part of the network. But
man, we got it. So hold on. We got to bet. There is no way that we know the winner tomorrow night. There's no way. You're giving away money, dude.
This is for everybody listening right now. Who will win the 2024 presidential election, and how many electoral votes will they receive? You can submit your guess at tastylive.com/unspecial. Tony and I are giving away.
You can submit them right now if you want.
Yeah, right now. We are giving away cash and prizes for this. The whole night we're giving away $2,024. And for this is a portion of the cash.
And Dr. Jim, in increments of 24.
No, maybe that'd be fun. But it's a big portion of the cash, and it's also a bunch of other special prizes to the winner. And so you have to pick the winning candidate and the closest number of electoral votes.
That's right.
Okay.
And if there's a tie.
Have you guys given out your tallies yet?
No.
We'll be in there.
No, we haven't yet, but we will.
We're just put it up on the screen. tastylive.com/unspecial. But
if we
don't
did
you
it now, Dr. Jim, they would have inside information on who the winner is.
No,
I
was gonna give you guys mine right now.
It's like us picking. No, we don't want you to say it out loud. We just want you.
I got it.
We want you to fill it out.
Yeah, that would be unfair, Dr. Jim, if you told them yours. I mean,
now,
that would be really
all I want to say is, if you're going to pick the winner, Jim, this is just to help you guys out because I know you two know this already. But if you're going to pick the winner, you want to be over 270 votes.
Man, thank you for sharing that with me because vexing the Vec, I would have got knocked out on the first question.
I know.
The first question.
I didn't want you to be embarrassed by being the only person in there with less than 270 votes.
So look, man, I'm just saying, I don't want to wager money because there's going to be too much tomfoolery, but there is absolutely no chance that we know the winner tomorrow night. Like, I can't believe you're giving dollars.
No. Hold on. That particular pool won't be paid out for a couple of days, but everything else will be paid out tomorrow night.
Well, yeah, of course, that particular and let me ask you, Tom, why won't that
verified pool be paid, winner, right?
Hold on, Tom, why won't that pool be paid out for a couple of days?
Because there's a big difference. There's a big difference between calling the election and actually getting the final verified number of electoral votes.
Right. Yeah. Okay. All right.
Just fill it out, okay? Be a tough guy.
I'm going to fill it out. I'm going to fill it out. And so, all right. So the normal distribution continues to be the foundation for so much of the statistical analysis that goes into the markets, and rightfully so, as even with its shortcomings, its applications reach far and wide. But inside the Tasty universe, it is understanding how its assumptions might disagree with reality that provide us with even more opportunity. And everybody, enjoy the unspecial tomorrow night. Tom, did you know that today you are practicing the audio and video right in my time slot? You took away my show today. Did you know that? You just took it away, dude. Like I don't even matter at all. You're like, oh, let's look at the daily programming. Which show doesn't matter? Jim's show. Gone. Done. Let's practice it right there.
Hold it. That was not my call.
Unbelievable, man.
Wow.
Let's do it in Liz and Jenny show. No. Let's do it in Jamal show. No. Let's do Jim's show. Gone. Done. Next question.
tastylive.com/unspecial.
Okie dokie. Sadnov, we're going to take a quick 90-second break. Dr. Jim, great stuff. Don't just because he pushed you aside, don't let that bother you. You're still very important.
He's been pushing me aside since day one. I've been jockeying for a position from day one.
You're very important to the network. Something else that's very important to the network. We do a market measure every Well, right now, right after this, a market measure. This was on earnings. So please, earnings edition, market measure. Stay tuned right after this. You're not going to want to miss it. Thank you, Dr. Jim. Appreciate your time.
Yep.
Tomas, we're back, my friend. You know what that means? Time for a little bit of the earnings edition of this market measure. Sadov, before we start this market measure, the New Orleans Saints know how to do it, Sadov. They just fired their coach, Dennis Allen.
And can I tell you something? Dennis Allen, he deserved to be fired, and that's an understatement. I mean, they were really bad.
Well, they let him go, Sadov. He won the first 2 games of the year and then hasn't won a game since. Third season.
Have they lost 7 in a row or something?
Yeah. The 3rd season with them. Yep.
Yeah. Yeah, that makes sense to me. But Bears are next.
From your mouth to whoever's listening.
You think the day's over already?
Man, we had that one little sell-off. Even the S&P went down 20 and now up 3. I mean, I hate to say the day is over with so much time to go. You know we're going to have some sort of movement, but it certainly seems. How about this? How many E-mini S&Ps are going to trade today, Sadov? Let me give you that prediction. You've had 400,000 trade already, which is fairly high, I think, for the first 45 minutes.
Yeah, I agree with you. I mean, I think it's going to be very churny and active, and there's going to be a lot of turnover the next 2 days, and a lot of people are going to be, you know, positioning and posturing and flattening out some stuff. Yeah.
Hey, Sadov, I just went to the site to submit my tally.
Yeah, they won't take it. They won't take RFK or DeSantis if you wanted to bet those guys.
No, the form reads submit another response at the bottom. Is this like the election? I can vote more than one time if I'm voting blue?
No, it's a mistake.
Are you sure?
100%.
Oh, that's a mistake? So you can only vote one time?
You can only vote one time. If you vote more than once, you'll be disqualified.
You sure? What if I'm voting blue? If I'm voting blue, can I vote more than once?
The only place you can vote more than once is in Chicago, and that's only for local candidates. Everywhere else, you can only vote once.
Gotcha. Okay. All right. Yeah.
But
this is what happens when you don't have me proofread this stuff. You went rogue and did it yourself.
Not really, but let's see what else we got here going on today. Looking for stuff. Oh boy, my SMCI call at the bottom. That was a good one.
It was a good one, and you took a quick 70 cents from it. No, not going to argue about that, but you would have had a good $1 already now, maybe more.
Would have. You trading Palantir for earnings today?
Man, that one, that's a tough one for me. I mean,
I agree.
We like to trade. Okay, we like to trade it from the bullish side in earnings past, but now at $41.50, it seems like a tough one. Good IV rank of 73, but you only got a $5 expected move, which is over 10% of the stock price. You usually don't get that much volatility, but it's a tough one. You look at November options here, Sadov, with $half wide strikes are pretty good, but you can't like go 2 times the expected move or anything like that. You don't get any kind of premium in November.
I'm going to agree with you. It's a tough one.
You got to be directional in there, and I'm not looking to fade it, but I don't know.
It's a tough. Palantir's a stock that scares me because more than anything else, I feel like it has that meme stock potential, which I hate.
Mm-hmm. Yep. Agreed.
And that's why it scares me.
Agreed.
All right. I like to tape action of the bonds. I like to tape action of the notes. I like to tape action of the dollar. The S&Ps, I'm kind of mixed on. I think they're going to be all over the place still.
Let's do it.
Let's do it. This is a market measure that the team put together for today. I think you're going to like it.
Okay.
Oh, you know what? Before I do this, I'm so sorry. I forgot. So we have one show left in America. And I got to mention it because it's Bat's only appearance in live appearance. It's the only way we can it's the only show we got him to his parole officer to allow for him to travel outside the state of Illinois. So
it took a lot to do too.
A lot of begging. We had a lot of begging. But Saturday, December 7th, we'll be in Phoenix, Arizona. And it is our last show in the U.S. for this year, last live show. And the bat will be out. There'll be other special guests. So it should be a fun crew. We're going to give away everything we got left at the end of this year. Tony's going to match the pot.
Sure.
We're going to have some fun. So Saturday, December 7th in Phoenix. I heard we're going to have a rare Frankie Walsh sighting there, among other things. And so we're going to have, there'll be a whole gang of tasty traders out there. So join us Saturday, December 7th in Phoenix. Doors open at 8. Show starts at 9. It's a fun one. Liz, Jenny, Julia, myself, the Bat, Dr. Jim, who was just on, and a bunch of other tasty personalities will be out there. We should have some fun. So hopefully we'll see all you guys out in Phoenix. You sign up at tastylive.com/events, or you can sign up at tastylive.com/ the unspecial if you want to play that little game that the Bat and I just played to see who wins the election and who gets the closest to the right number of electoral votes. And we're going to just give away a bunch of stuff. It's all going to support our election on special. We also have a bunch of games we're playing tomorrow night. So some constitutional questions, among other things. And
beautiful. I love it.
Yeah, we're going to be taking different callers throughout the night to play the games with us. So it should be a lot of fun. And then next week, on a crazy move that I think I'm going to regret for the rest of my life, I'm going to Europe to do 5 events in 5 nights, which could be the end of me. So this may be our last week together. A week from today, I'll be in Edinburgh, and I've never been in Scotland before. I cannot wait. Tuesday night, we'll be in Manchester, the UK. Wednesday, we'll be in Birmingham, November 13th. Thursday night, we'll be in London. London show is sold out. And then Friday, we'll be in Dublin. And there is, I think, just a couple seats left in Dublin and a couple seats left in Edinburgh. And we have room in Manchester and Birmingham. We're going to be going to a wait list later this week for Dublin and Edinburgh. And then London, we're already on a wait list. But Manchester and Birmingham, we've got plenty of space, so we'd love to see you come on out. But anyway, if you want to sign up, tastylive.com/events. You can sign up for any of these, or you can sign up for also the 2 digital collectibles we have coming up. One of them is on November 16th, which is the show we just did in Dallas this past weekend. And then the other one is on December 14th, November 16th and December 14th, which is the show that we're doing in Phoenix with everybody that's doing that show out in Phoenix. So it should be a lot of fun. All right, ready to do a little market measure?
I am, kind sir.
Kind sir. Oh, I didn't got, you know what I hate about, there's one thing I hate about this business, partial fills.
I know. You want to do something, whether it's in or out, and they give you a partial, and they make you pay up or sell down by a couple of pennies, and it's just annoying.
They're just annoying. You know, the old partial fill thing, so annoying.
Even the S&P's up 12, Sosnoff. NASDAQ up 46. The NASDAQ has turned around. The Russell up 10. The Russell's turned around. Only the Dow is red. Volatility in by 70 cents.
Not
Microsoft that was down 3 is basically unchanged. Apple that was down 3 is down 1.
Not only has the Russell turned around, it's actually taken the early lead
It is up almost 1%. Yes, 0.75%.
Yeah,
Sure.
which is good for the good kids.
And volatility in by 3.5%. That's a big change too. Volatility was actually only down around 10 cents earlier.
Yes. Let's see. All right, let's do it. I'm Tom Salzman. He's Tony Batista. How much earnings drive stock movements, up, down, or flat? We decided to take an in-depth look at earnings to see. We've talked a lot about earnings being kind of like almost as the closest thing to a zero-sum game. They're an engagement tool. Sometimes you have a directional bent, so you make a bet. Sometimes you just want to play the premium collapse. All those are cool, but as a trade, because they happen so quick and because it's just like kind of an overnight vol crush, instant gratification, there's not really a lot of adjusting. There's not a lot of edge. But let's see, how much do earnings drive stock movements? Let's take a little look here. So today we're going to spotlight price dynamics following earnings announcements, analyzing mean percentage stock moves to identify reversals, stability, and spikes. And it's not just about the numbers. We're going to provide insight into market sentiment and reactions. This is going to be helpful regardless of where you are in your trading cycle, whether you're a newcomer or a seasoned pro. And we question whether these figures predict future trends or merely statistical noise. What do you think, Bat? Statistical noise, or is there something behind it?
I'm going to say noise. That's just my gut feeling. I obviously have no idea. I mean, you looked at the earnings from Kai just a moment ago, and they've been flat to lower. I don't think there's anything to this myself, but I don't know.
Let's go next slide.
What do you think?
I agree with you. I think it's a lot of statistical. I think it's more noise than it is. Outside of 1 or 2 days, I don't think there's any kind of predictable trend from that. But let's go next slide. Okay. So we used 6 years of research and we picked like 5 of the biggest stocks: Apple, Tesla, Netflix, Amazon, and Nvidia. We calculated the mean percentage if the price will reverse, stay the same, or increase after earnings. We also calculated the magnitude of the change. And we compared results in earnings periods. Remember, in the US, earnings are quarterly. Different places around the world, earnings are different. Like in the UK, for example, they're only twice a year. But quarterly here puts a lot of pressure on companies to hit their number, I guess. It's the easiest way to say it. Or to beat expectations. Let's go next slide. So for starters, we looked at, again, 6 years, 5 different stocks. And these are, now let's put a little background around this. The last 6 years have been a bull market.
That's correct.
And we picked 6 of the strongest stocks. I mean, Nvidia is a $3 trillion company. Tesla is probably a little less than $1 trillion. Amazon is, I think, is Amazon a $3 trillion company? It's got to be close. Netflix is,
I was going to say it's going to be close.
It's a $2 trillion. Apple is, I think Apple, Microsoft, and Nvidia are $3 trillion. Amazon and Google are $2 trillion. And
Amazon's $2 trillion.
Yeah.
2 trillion and change.
Yeah. And Netflix and Tesla are just under $1 trillion, but these are huge companies. So
yes,
moves upward across the board. They average about 67%. That's pretty damn good for these companies.
You're going to be surprised. Netflix only 323 billion.
Yeah, I am surprised. I thought it was more than that. And but this is the average move after an earnings announcement. So up moves 67% of the time. Reversals after that 33% of the time. And the magnitude of the change, because Nvidia has been so much and so is Tesla, it's about 11%, which I promise you there's not 11%, a lot of 11% expected moves. So what's weird about this number is it skews things a little bit, because you'd look at Apple, Netflix, and Amazon, you go, oh, those are definitely tradable. But when you don't know what's going to do, which stock's going to do what, and who's going to do this and that. And when you throw in Amazon, when you throw in Tesla and Nvidia, that 11% number, that's a high number.
Sure.
Like it's rare to get 11% implied move. Very rare. Like, I mean, you might see it tonight in what's the Palantir tonight? But you're not going to get it for one of these stocks, that's for sure. Right. I think Apple last time was a 5 or 6% implied move. Palantir's probably around 10, 11, 12, isn't it?
It is. Yeah, it's over 10%. Yep.
Yeah, I was going to say it probably is. But for these big stocks, that's pretty rare. Let's go next slide. So that was the first day. So now the second day, let's talk about, in this case, a little bit of continuation. And the chances of an up move second day after 67% of the first day, 64% of the second day. And the chance of reversal go up a little bit from 33 to 36. But the magnitude of the change on the second day was surprisingly, okay, on a percentage basis, even greater. So
yeah, it is surprising.
Yeah. Let's go to the next slide. So then we looked at day 3 to say, you know what? Is this just, is this, is an up move just, is it that much, that much pressure to the upside? And the numbers on day 1, day 2, day 3 were very similar. And the magnitude of the change, obviously that continued to, I shouldn't say obviously, but that continued to go higher. The reversal numbers are about the same. The move upwards about the same. When you start to look at these stocks, you're like, okay, that's for the first 3 days, it's kind of trendy for 6 years. Let's go to the next slide. And then we looked at the 4th day to see, you know what? It's funny, but the trends continue. The reversals got higher. The magnitude of the change got greater just because, we're deeper into this. But
sure,
the numbers stayed pretty consistent throughout. I mean, each stock is a little bit nuanced, whatever, but the numbers stayed pretty consistent throughout. Go to the next slide, please. And as you can see here, essentially the same thing, except obviously the magnitude of the changes now, it just goes up exponentially, but the move upward and the reversals are all about the same. So as we go to the takeaways on the next slide, over the past 6 years, an analysis of the average percentage changes in stock prices following earnings announcements reveals 3 key trends: reversals, stability, and upward spikes. Notably, from day 1 to day 5 after an earnings announcement, stock prices tend to rise more often than they reverse, okay? With the average upward movement occurring about 65 to 70% of the time. The data also shows that stock prices have never remained unchanged following an earnings announcement. That's really interesting. They basically, that's more interesting than anything else, is that they never remain unchanged. Additionally, the magnitude of price changes grows over time, indicating that the market activity reevaluates stock values as the days pass. This pattern suggests a dynamic response driven by delayed reactions, new information, speculative trading, and resulting in increased post-earnings volatility, which to me was one of the more interesting. First, there's 2 really crazy takeaways from this. One is that we never stay the same, and 2 is things don't get better; they get a little worse as far as the direction goes. And from reading this or from watching these numbers, I think taking your stuff off relatively early makes the most sense. Waiting,
and that's the way that we've been doing it with the show, for sure.
I know, and waiting seems to make things worse, not better.
Yep.
It was just interesting to look at the 5 days of data and to look at now again, these are 5 really healthy, the biggest stocks in the world.
Sure.
And we've been in a bull market, so there's a lot of positives to this. But for the last 6 years, it's really interesting information.
True. Good job, Sadnov. You know what? We're going to take a quick 90-second break. Does that sound good to you?
Sure.
We're going to bring in my friend and yours, Mr. Scott Sheridan, next. Tasty Trade World Headquarters. Immediately following these messages from our sponsors. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, would you like to take a quick look at the market?
Sure.
Even the S&Ps were down last night when you were doing your live show, last call. Even the S&Ps are up 6 right now, but they've had a relatively tight range, 26 handles, top to bottom. We're sitting right in the middle of the range. NASDAQ up 5, Russell down $2.30, and the Dow down 25. Volatility down 30 cents to 2015, but over 20, as you can see here on /VX. Bonds up a full point and change. Sadnov talked a little bit about them earlier today. That's a 1% move. I mean, I guess they're hovering around their lows, much closer than their recent highs over the last month, but they are up a full 0.04. Notes are doing the same, almost to the same degree, a little bit, half as much on the notes, but again, catching a little bit of a bid from the bottom. Bitcoin futures down $550 to 69. Remember, about a week ago, they were flirting with 74. Oil up almost $2 to 71.43. That's the high end of its range. You can see here they traded almost $1 lower, a little bit more than $1 lower to 70.25. Gold continues its rally up $4.70, although it has had a day or two of downticks, which is basically not allowed. Silver up 17 cents. That's a bigger move in silver on a relative basis. That's a 0.5 percentage point in silver. Net gas down small. Euros and currencies, as you spoke about just a moment ago, Sadnov, euro catching a bid here, up 0.0059. You could see here on the euro last couple of days catching a nice little bid. I don't know what the yen is doing. I haven't looked. What's the yen doing?
It's up big. It's up big.
Ooh, /6J. I would think the Sadnov's going to be in a much better mood today. We'll find out. But yes, the yen catching a little bit of a bid off its bottom too. We'll see if this holds. That's all I got.
Okay. So we got a bunch of emails over the weekend. I was busy answering stuff.
As we do every weekend.
As I do every weekend. I spent 3 hours yesterday morning in the coffee shop answering emails.
Oh, how nice. Have you had your first cup of coffee yet, Sadnov?
No, but I've drank a lot of iced tea.
So you own a coffee shop and you don't drink the product?
No.
And that's not good business. Not good business sense, not good business.
I drink the iced tea, and
it's not an iced tea store. It's a coffee store. It doesn't say bad tea.
It's an iced tea store too.
Coffee.
And I eat the toast.
You don't swallow though. You spit because your body's a temple.
We ran out of toast. Jimmy had to make a special trip to the city.
My bread's selling like hotcakes. Another business you'll be building on my back. I love it. I hope you say something on my tombstone someday.
Yeah, we had a special delivery. So
nice. Let me just tell you something. These delivery charges, they're going up.
They're already too expensive. But kids got to make a living, so it's all right.
Sure. What do you got for us? Confirm and send.
Emails that came into us over the weekend. Let's do it. Can't believe it's November 4th.
New. Oh my God, you still have that sniffle.
No, not really.
You just forget it.
Let's see what we got here. With the election so up in the air, do you think it makes sense to close out of positions ahead of time and wait for results and then get back in?
Easier said than done. Looks great on paper a week later. You just got to tell me, this is like a trend. You got to tell me when the trend starts, when the trend ends. Very hard to decipher. So for me, this would be a really tough thing to do. I don't mind you lightening up positions going into the elections if that's what makes you feel better. And I don't mind you increasing your positions going into the elections if you have that kind of bias. So for me, it would be very hard to pick and choose when to get in, when to get out.
Yeah, it's always hard to pick and choose. So I decided to write about this last night in the Cherry Bomb.
Yeah.
And
Yes, you did.
I focused on if you don't get the Cherry Bomb, please sign up for it. And we can send it. I mean, I basically laid out 3 scenarios. And hopefully I don't mess it up when I'm explaining it now. But I laid out 3 scenarios. The first scenario is that you reduce the size of your positions. It doesn't mean you get out of everything. It just means you reduce the size of your positions and put it down to a very, a much smaller than whatever you have on now. Like maybe it's a third, maybe it's a half, maybe it's 2/3, and you put some cash on the side, you have some dry powder, and you wait for an opportunity created by the elections after Tuesday night, and then you reload on Wednesday or Thursday. That's what I call the most conservative approach, is take some money off the table. Or take some positions off the table and free up some cash. The second, which I consider the moderate approach, is that you take some of the risk off. So you don't take as many of the positions off, but you tie up some of the risk. Like if you have some naked options or stock, you sell some calls against it. If you have some undefined risk trades, maybe you buy in some wings. Whatever it is, you reduce your risk. So you're not reducing the size of your positions, but you are reducing your risk. You're not necessarily freeing up a lot of cash, but you are taking a lot of the delta risk off. You are neutralizing it. Maybe you're widening out the strikes, buying the guts, selling the wings, whatever it is. But you're basically reducing your delta exposure, lowering your theta, reducing your delta exposure. That is the moderate view. So that's the conservative and the moderate. And then what I call the aggressive approach is that you go pure contrarian. And whatever has been down big prior to the election, you go all in on the other way. So it's essentially a little bit of what I'm doing for this election. Things that are beaten up like bonds, I'm buying them. Things that are overbought, which I think are like overbought, like the US dollar, I'm selling it. Things that I think are overbought, like the NASDAQ and the S&Ps, I'm selling it. Things that I think are oversold, like the Russell, I'm buying it. So I am definitely taking a contrarian approach. I'm reducing a few positions that I don't really like, but for the most part, I'm keeping most of my risk on, but I'm going all in what I consider on asymmetric opportunity. Now we're getting paid a little bit this morning, so that's a good thing, but we'll see what happens. That's my approach to that. Let's go next slide.
Very good.
I was
think
watching
you made some good points there.
Yeah, I thought it was just the time to write about it last night. That's all.
Yep.
I was watching Tasty Live Friday morning before the market measure segment, and you and Tony were discussing SMCI. Talked actually a little bit about that with Vanetta this morning. The IB rank was listed at 104. I'm wondering how it's calculated to be 104, since I thought IBR was supposed to be from 0 to 100.
And you thought correctly. It is 0 from 100, but intraday, there's no fence on that 0, and there's no fence on that 100. Meaning, like today, or last night, you had SMCI with an IB rank of 109, which means that the implied volatility has never been higher. If we kept it at 100, even though volatility was going higher intraday, you keep that IB rank number at 100, you actually wouldn't know that volatility was higher right now than it was an hour ago. So we keep no fences intraday,